Good morning, everybody. Welcome back to another episode of the Market Open. It is Monday morning. We are live October 13th. We are back to action. Hope everyone had a good weekend. It is Monday. And, we are blessed to live another day on this planet and get to analyze the global capital equity markets, and boy, are they giving us something to analyze. This has been a wild weekend. I could argue this is one of the most wild weekends we've had all year. Obviously, the April tariff liberation stuff was definitely a moment in time that created some crazy weekends, but this has been a crazy weekend as well. And we're going to go through what happened on Friday, what happened on Saturday and Sunday, what happened literally this morning in regards to the equity markets. Obviously, the pre-markets are green. For those that missed the news, Trump had a little bit of a pivot, which maybe means, as Albert says right here, October could be back. And the pivot essentially is Trump de-escalating the situation that caused the nasty 3% day on Friday that hurt all of us. Not only Trump, J.D. Vance, Bissett this morning, everyone in the administration basically came out and said, yeah, it's not as serious as like you might have thought it was on Friday. And as a result, you're getting a green pre-market. You're getting a pretty green pre-market. So it is a lot to analyze, a lot to get into. We got a bunch of other headlines in general that we'll go through. But as you can take a look in the pre-markets, Robinhood got to 132. It's at 144. Palantir got to 170. It's at 179. Tesla got to 410. It's at 422. The S&P was at 647 after hours on Friday. It's at 661. So, I mean, now we're still down from 673. It's obviously been a little bit of a rough 3-4 days based on that Trump-China tweet, which kind of caused all of this. But based on the pivot we got over the weekend, and we'll talk about kind of what that pivot was, you're seeing a lot of green. Bitcoin and Ethereum, they have rebounded. Ethereum was at 3,400. It's at 4,160, down a little bit from where it was yesterday. Bitcoin was at 106, down from 126. Right now it's at 114, so I don't think it's the worst thing in the world to at least get that bit of a rebound. But you do have these two that have been hurt from the Trump Truth Social China announcements, and hopefully throughout the coming week, they'll be able to rebound. And we'll be able to go from there. So there we go. We got a lot to talk about, a lot to get into. Thank you, everybody, for being here. Again, it is Monday morning. The sync of the audio, I noticed that last night. I think, genuinely, I think that's a YouTube thing. It's either a YouTube thing or a StreamYard thing. I'm leaning more towards that's a YouTube thing. If you refresh, that might get fixed. But also, it might naturally just get fixed in a couple minutes because it was happening last week and it got fixed. So I think the sync thing should be fixed pretty soon, but it's definitely not. I don't think it's me. I don't think there's anything I'm doing to get the sync up here. But there was a couple other streamers. Tanner was having that problem. There's a couple other streamers that were having that issue. So hopefully it's not just me, and YouTube will fix it. Just restart. Okay, yeah, restart YouTube. Okay. So raw floor restarted YouTube and it fixed. So restart it. And if you do that, that should help out. Okay, cool. So let's get into it. I think we'll start off with a couple headlines that we got this morning, and then we'll get into all the macro stuff that happened over the weekend. First of all, BM&R, this broke literally 5 minutes before I went live. And we got confirmation that Tom Lee bought more Ethereum. 3 million ETH Tom Lee has now put on the balance sheet. They bought 202,000 ETH over the weekend. He writes, the crypto liquidation over the past few days created a price decline in ETH, which Bitmine took advantage of. We acquired 200,037 ETH tokens over the past few days, pushing our ETH holdings over to 3 million or 2.5% of the supply of ETH. We are now more than halfway towards our initial pursuit of the alchemy of 5%. Bitmine has not started staking yet, and they want to get into the staking game after they get to that alchemy of 5%. So it looks like they are going to work really hard to get to the process at which they could stake. And, at the rate at which they're going, it seems like in the next coming, I don't know, couple months, they're going to be able to get there. And if they do, that would be quite incredible. So you do have Tom Lee issuing that update as soon as 5 minutes ago about the Ethereum that they have on their balance sheet. Now, I believe their net asset value is around 12.9 billion if you add up everything else that they have as well. So they have, as you can see right here, 12.9 billion, 3 million ETH, unencumbered cash of 104 million, other crypto holdings. They have $134 million stake in Orbs, and I think they have some Bitcoin as well. And so that gets you a $13 billion net asset value. Now, Bitmine was hit the worst, I would argue, almost a 20% decline on Friday, fell all the way to 47, rebounding right here at 54.71. I don't think this thing has to jump back to 60 anytime soon, but it's nice to see it stabilize a bit because Ethereum is stabilizing. Nvidia as well. Nvidia fell all the way to 180, right back here to 188 after going to 195 in the morning on Friday. I mean, if you bought anything in the morning on Friday, unfortunately, it was just not the best timing, and including myself, right? But nonetheless, you did get an opportunity intraday, and it seems like we are rebounding. Not fully recovered, but there is an opportunity still potentially to get into some of these names at a discount. And so you got BMNR and Nvidia trying to recover back to where they were back on Friday. So yes, they are halfway to that 5% goal, and that 5% goal obviously is going to be very strong for them to get to. But it is nice to see that they took advantage of it. And why did they take advantage of it? Well, Tom Lee believes in the broader ETH ecosystem long term. And as a result of that belief in the ecosystem, they're not going to get scared if ETH falls 10, 15%. They're probably going to use that as the best opportunity they can, end up buying the dip. And it seems like that is what ended up playing out. So we'll calculate their new NAV, but they do have 13 billion. And so when the market opens, we'll see what the NAV is and what the premium to that NAV is as well. And we'll keep going from there. So that was the update we got on Ethereum with Tom Lee. Now, in terms of what's going on with US and China, so just do a quick little recap of what happened on Friday. Trump said that we are going to be imposing 100% tariffs on China, and that is what created the waterfall decline that we all experienced live. In fact, ironically, I clicked on Bitmine because someone sent a super chat asking a question about Bitmine, and we saw it go from 58 to 56. And I was like, oh, that's weird. We clicked on the ticker as soon as the stock starts falling. They're probably diluting at this moment, right? So they're probably like Tom Lee's literally dumping shares in front of us, and we're watching it happen because that type of a precipitous decline you could only describe through some level of mass selling. But then we looked at the S&P. Then we looked at Palantir, then we looked at Robinhood, then we looked at Rocket Lab. We're like, oh no, everything's selling off. And so that actually started the discovery of what the hell is happening. And what ended up happening is Trump tweeted that, hey, we have a very, very big issue with China, and we're going to have to take action. He said that China's threatening export controls and bans for countries across the world, and we might have to respond to that. And then after hours, he made it worse by confirming that America will impose a tariff of 100% on China over and above any tariff that they are currently paying on November 1st. I mean, quite literally, guys, this feels like April 2.0 because, and I think retail really did see through it. We're going to get more data in the next coming days of how much money retail put into this dip on Friday. But based on what I asked on the market close, I mean, a lot of you guys bought the dip because a lot of you guys just didn't believe that, oh, really? November 1st, we have a month for 100% tariffs? Yeah, I guess so. I mean, most people were like, we're probably going to negotiate something in a month, and there's probably going to be a very low probability of Trump actually messing up the bull market by putting on tariffs on China after he just negotiated a China deal. Like, it just didn't make sense across the board. And it's not like it wasn't treated as something serious, but it was one of those things that was like, really? Is this going to be the thing that messes up everything? And it didn't feel like that. And as a result, you get this tweet Sunday afternoon, and that's when the future started going crazy. Trump says, don't worry about China. It will all be fine. This is not literally, hey, it's a great time to buy, but I mean, how much more explicit can you get about probably it's the time to buy. You shouldn't worry about anything. Highly respected President Xi just had a bad moment. He doesn't want depression for this country, and neither do I. The USA wants to help China, not hurt it. And that right there was the pivot. That right there was when, it wasn't Tuesday yesterday, but it might as well have been Tuesday because it was a Taco Tuesday. And nonetheless, Trump said, well, Xi had a bad moment. It's not that big of a deal. And, we're going to be okay. And then you had JD Vance come out a couple hours before that and says, we appreciate the friendship with China. Trump hopes that we don't have to use leverage. Trump is willing to be a reasonable negotiator. And then you had Basent this morning that said the U.S.-China relationship is good. 100% tariffs doesn't have to happen. AKA, we don't really want to impose tariffs. And we'll see if China wants to be a reliable supplier for rare earths. Now, China came out Saturday night, which already began de-escalating the situation. And they said, look, we're not even trying to be that aggressive with rare earth minerals, and we want to work with the United States. This is the post right here, translated from their language into into English. And basically they were saying export controls are not a ban. Global civilian supply chains aren't going to be impacted. We're only doing this because the U.S. is being unfair in certain areas. We want to work with the U.S. We don't want to fight a trade war. It was a very kind of like, hey, let's come to the table, let's have a conversation, and let's talk. And the way Trump framed it on Friday, which is why it was kind of scary when you saw everything falling off, is because Trump was like, China's isolating from the entire world. And it's almost like it's us against them, and we're about to decouple. I mean, that was the tone that was being given off from the tweets. It created a $20 billion liquidation in crypto, which has not been seen since COVID, and it wasn't even near any of those levels during COVID. But it really created some issues, only for all of this to just come back to normal and for the markets to realize, oh, it's not that big of a deal. And we went down 3% on this Trump-China tweet that had nothing to do with the earnings picture, nothing to do with the Fed. I guess the markets needed a reason to come down, and Trump gave them a reason to come down, but it wasn't actually as serious as a structural flaw in the broader thesis of the bull market right now. And as a result, you have markets starting to recover. So wild weekend. And as a result of that weekend, I think a lot of people got the opportunity to buy the dip. Now, does that mean you pile into the market today? I don't think the answer is yes. However, I think the perception of this dip could be as follows. This is my last opportunity to get in before Q4 run. These prices are likely not going to give me better entries if there's not something structural that changes the economy, aka the Fed, interest rates, earnings, and we're going to talk about earnings, but earnings this week look like they're going to be pretty good. So I need to buy the dip. And I think that is the mentality that could be happening through retail investors and fund managers that are underperforming the S&P this year and might be saying, look, I missed the entire run in Robinhood and Nvidia, but at least I'm getting it 10% lower than what I could get it at all-time highs. And I don't know if there's going to be another shock to the system as aggressive as there was on Friday to get these prices, especially going into earnings season. Now, maybe there are multiple shocks to the system, and maybe Q4 is going to be very bumpy going throughout the end of the year. But I think the mentality might be from a lot of people, hey, this is my one last dip to get in. Does that mean today's the day to spend a ton of money? I don't think so, because I think you still have to be cautious. And I think if you did spend, if you had 100,000 and you spent 20,000 on Friday, maybe you spend another 20,000 a day and you still keep that 60,000 left in case there's other opportunities. But there might be some people that are underperforming massively this year, and they may be saying, you know what, I've got to put the final 80,000 I have into the market because I've been waiting so long for a dip. This probably is my opportunity. And if I don't get another one, I'm going to be on the sidelines until probably early 2026. And then I'm going to have to be hoping that 2026 gives me a dip opportunity, which maybe it does, maybe it doesn't. But if you're hoping for that long, again, that might not also be the best idea in the world. So as a result, yes, I do think it's going to be a volatile week, but we're going to have to see how much money ends up coming in. We also have to see, is this a rug pull? Is this a little bit of a bull trap? I mean, that's a possibility, right? I do think based on how the futures are going and based on Trump's statements, it might not easily be a bull trap, but you might have market makers that want to toy around and pump things up and then rug it midday, and then maybe it comes back to normal. So this is going to be a very important week. We do have earnings starting, so we're going to see how the earnings effects from those financials are going to have on the psychology of the market. But nonetheless, that is something that I think everyone does have to watch out for. What about government shutdown effect on our economy? So the government shutdown is still in place, and hopefully it ends by the end of this week. I mean, if it continues this week, it'll be the second longest shutdown in history. The Trump administration has come out and said that they are finding a way to pay military members. So October 15th, in 2 days, is when a lot of those military members get paid. And it looks like the Trump administration is going to find a way to make sure they get paid. That's what Trump confirmed last night. But they've already started laying off a lot of people. And so, I mean, I don't know what the impact is going to be. So far, markets have basically said they don't know much about it, just based on the sheer price action. The reason we had a 3% decline is because of a China Truth Social post, not because of the government shutdown. But if this goes any longer, obviously it won't be the best thing in the world. And so that's one thing we're going to have to keep an eye on as well going into the end of this week. I think the market maker is going to be choppy. Yeah, I agree. I think, well, the thing is, though, if we get a strong earnings cycle, and we'll talk more about earnings, I mean, you might just have a lot of money saying, dude, we cannot deny double-digit earnings growth. And the most important companies in the financial space, JP Morgan, Wells Fargo, Citibank, et cetera. By the way, JPM made a big announcement today that we'll talk about as well. They got to set the tone. And if they set the tone, I think it would be very, very exciting to see where this market can go. Here is Tom Lee this morning on what he thought about the Friday sell-off and where he thinks the opportunities may lie.
Morgan's announcement today really ties into why investors should stay pretty constructive on the U.S. I mean, JP Morgan, the biggest and the most powerful bank in the world, is investing $1.5 trillion into the U.S., into things that are going to strengthen sort of U.S. advantages, critically important areas. And at a time when the U.S. is dominating AI, and of course now we have this big tailwind as blockchain is an initiative that Wall Street is building products on. So I think there's a lot of reasons for investors to stay optimistic. And I know there's a lot of talk about bubbles, but I think the thing I would just continue to point out is Nvidia trades at around 27 times forward earnings. It's still on a PE basis cheaper than Walmart and Costco, which trade at around 47 and 34 times forward earnings.
Yeah, you've got positive reasons to think that earnings are going to do well in a time when interest rates are coming down. So that's just like an elixir for stocks that is very powerful.
That's right. And as you know, CEOs have not been that confident for the last 2.5 years because the Fed's been running tight monetary policy. The ISM's been below 50 for 31 months now. That's the longest stretch in history. I think the sell-off Friday is giving us a bit of a gift because that surge in the VIX, a 32% rise, is the 39th highest ever one-day surge. And the 1-month median return is almost 3%. Of the 38 other instances. So I think the S&P could add, 200 points between today and mid-November.
So I think that's an important stat. Tom Lee basically saying, hey, and we were talking about this last night on the Future Show, every time the VIX has a dramatic upswing, a spike, as you could call it, of more than 30%, 38 out of the 39 times, Friday was the 39th time, the S&P is up a month later on average 3%. If that's the case, we're going to recover everything that we lost on Friday if history repeats itself and we have a VIX spike of up plus 30%, which usually tends to be a panic moment. And usually in a panic moment, you buy. If the VIX gradually goes up over the coming days and weeks, then you tend to have like a more prolonged sell-off. If you have a rapid one day 30%, in April it was one day 60% move on the VIX, that means there's a lot of panic, and that tends to set a bottom in equities because that panic essentially signals that people should be buying right here because it's not as serious of an issue for why the markets are collapsing. By the way, Broadcom right here is up 10%. Not really sure why. The only headline I have on Broadcom is they got an upgrade to $400 this morning. But I don't think there's anything deeper than that. Maybe Broadcom's just recovering everything it lost on Friday. Now it lost 5% on Friday, so it's recovering. It's up 10% right here. It means it's up another net 5%. I don't see any headlines though outside of the upgrade. So maybe there's something else. I'll see if there's any other news. But if you're in Broadcom, you're getting a 10% move right here in the pre-market. Is this it? OpenAI chip deal with Broadcom covers 10 gigawatts of compute capacity. Broadcom shares up 12% based on the custom AI deal with OpenAI. So this AI deal with OpenAI was announced on their earnings. I guess the street is reacting to, hold on, I think I have some coverage on it. The street is reacting to the 10 gigawatt deployment of it, which maybe that number wasn't talked about, but the $10 billion partnership was talked about. Now, 10 gigawatts is way more than 10 billion, like way more than 10 billion. That's closer to 100 billion. But let's get an update right here.
And Trump against China with its rare earth magnet restrictions, triggered some fears that, here we are again. I think the conciliatory post from President Trump over the weekend toward China said it will all be fine, highly respected tariffs on China. And I think, Jim, the other important point here is that, we are less.
Okay, so they're not talking about it yet, but it looks like that's the case, folks. OpenAI and Broadcom, 10 gigawatts. My goodness. That is massive, dude. That is not the simple $10 billion custom ASICs deal they had back in September when they announced their earnings. Dude, 10 gigawatts is different. That's a lot of money, dude. I mean, Nvidia was doing a 10 gigawatt deal. It's up 13% right here. One could argue it should be up even more. Now, granted, none of this is like finalized or real. All of this stuff is just promises, but the perception of 10 gigawatts is, yeah, that's 500 billion, right? That's not even 100 billion. That's closer to 500. But this is like, and if this is all for ASICs, I mean, if you're a Broadcom shareholder, you've got to be happy. These are custom designed AI accelerators. These aren't regular general purpose GPUs. And one of the arguments the Broadcom bulls had back then when they signed this deal with OpenAI is that, OpenAI is going to need more custom chips than general purpose chips. Now, OpenAI said they're going to need a lot of chips, AMD chips, Nvidia chips, Broadcom chips. But that's big. That is big. There you go. It looks like, again, OpenAI continues to be at the center of everything in AI, whether it's getting AMD stock to go up or getting Nvidia stock to go up or getting Broadcom stock to go up or getting Oracle stock to go up. Like whenever these stocks take a massive rise, it's an OpenAI partnership, which is a little scary to some extent, but it's also like, my goodness, OpenAI might just be one of those companies that ends up becoming a multi-trillion dollar enterprise. So we'll talk more about this deal in a bit, but goodness gracious, there you go. OpenAI and Broadcom, 10 gigawatt deal, Broadcom right there, up 11% on the day.
Still got, if people.
I think with Friday's sell-off, I saw many people calling the top of the markets or declaring that the bubble is bursting, or that, this is the reason to be buying gold. And if investors are that quick to call a top just on a 2.7% decline, I just think a lot of good news isn't really priced in. I think there's still a lot of reluctant investors on the sidelines.
You have found a kind of everything's about crypto. You found a reason gold's up, and it's because of crypto. Not directly because of crypto, but you think the incremental buyer in gold there's gold-based stable coins, and people need to buy gold to back the stable coins. And that, you think that's enough to be up $92 all the way up to a new high?
Well, there is an interesting correlation we found, which is when I look at Tether's supply of dollars outstanding, it really started to rise about 3 months ago, and that corresponded with gold essentially going up every day. I'm not positive of this, but I think stablecoins, including Tether, may be one of the largest buyers of gold today.
There has been some reporting over the weekend that Tether is launching essentially tokenized gold. So they're backing gold one-to-one with their gold stablecoin. And as a result, I mean, it's quite fascinating. I don't think I've heard this over the past couple of months as we've been analyzing gold. One of the reasons gold could be running as much as it's running is because Tether, one of the largest stablecoin issuers, is buying a ton of gold to custody it, which means there is gold demand, right? Because the reason they're buying it is because people want exposure to it. But it also means that a crypto company could be the reason for why there is this much buying pressure coming in on gold. Here's some coverage on the Broadcom deal, and then we'll keep going from there and see if we can get some of these details.
Talking about a collaboration of 10 gigawatts of custom AI accelerators. OpenAI designing these accelerators and systems. They'll be developed and deployed in partnership with Broadcom. Essentially their own chips and systems for OpenAI that they can embed, and again, I'm reading from the release here, what is learned from developing frontier models and products directly into the hardware, Jim. Now, as opposed to that Nvidia deal, which captured the market's imagination a couple of weeks back, there's no money changing hands here. And it's different, obviously, than the Oracle deal, which has never been fully confirmed, but which news reports have it some $300 billion in terms of building compute for OpenAI, essentially, over the next 5 years. This is for them to develop their own chips, conceivably, I would think, to bring down the overall cost, because as you well know, cost per token is sort of a key thing we're watching here in terms of these LLMs and the like, and they got to bring their costs down if they're ever going to hit the kind of numbers they need to deal with how much they've got going out the door and how much the losses are ultimately going to be, at least in the near term.
Well, look, I'm glad I have Greg Brockman, OpenAI co-founder and president, and I also have Charlie Callis, who's the Broadcom president, in a few minutes to be able to talk more about this deal. Sarah, you talk to a lot of people, you talk to a lot of bankers, and you know that what's happening here is OpenAI, without having any real money in to be able to make these deals, continues to make them. I believe also, I can't wait to speak to Oracle and David, because they continue to make them. At the heart of all this is either a belief that this whole thing is precipitating the giant bubble. This is separate from the raw earth mineral bubble, or it's you as OpenAI has said over and over again, hey, get with it. This is an industrial revolution, and the people who move first win. I don't know, Sarah. I heard Pat Gelsinger talk earlier about how it's all a bubble, but Pat's out.
I don't know.
These guys are in, and I think that the guys who are in are driving it, and if they have the money, they're going to take it.
Here's the case against the bubble that I hear actually from a lot of people that I trust. It's not being driven by irrational speculation, right? Well, we don't know exactly. I mean, and I guess it hasn't been proven to be profitable growth ultimately, but it is being driven by fundamental growth. And if you look, definitely OpenAI is at the heart of it. But if you look in the public market at the companies that are at the heart of it, it's dominated by a few incumbents that have very strong balance sheets and very strong growth, Jim. And that to me, that's the best case against it.
Now, again, the case realistically against all of this circular money going round and round is there will be an ROI on this. But my goodness, folks, for those that are just joining, OpenAI, Broadcom, custom ASIC deal. Here's some details of it. OpenAI will design the chips. Broadcom will build the racks. The system will include accelerators and Ethernet solutions for scale up and scale out. Deployment starts second half of next year, ends 2029. So 3-year deal. Racks will be deployed across OpenAI facilities. The goal will be to embed frontier model learnings directly into the hardware. Total power capacity, 10 gigawatts. If 1 gigawatt is around 35 to 40 billion, this is a $350 to $400 billion deal. I mean, now, again, I can't lie. It does feel a little scary seeing OpenAI at the center of every single major company that has had their stock go up 30, 40% this year based on relying on OpenAI. AMD, Nvidia to a lesser extent, but they did have a big move from the 170s once they announced that partnership. And then Oracle's entire move was because of the RPO growth, remaining performance obligations because of OpenAI. So OpenAI, I think whether you like them or not, whether you hate Sam Altman, you love Sam Altman, I mean, he is responsible, one could argue, for this entire AI ecosystem manifesting in real revenues and real profits. And I mean, we've got to hope that OpenAI's success continues to flourish, because if it doesn't, there's going to be some issues. But a lot of this money right now is not confirmed. I mean, how is OpenAI going to pay for this $400 billion from Broadcom? I mean, they're probably going to use some of the money they get from AMD, or some of the stock they eventually get from AMD. They're going to probably have to sell that stock. They're going to have to use some of the $10 billion investments they get from Nvidia. Overall, $100 billion is what Nvidia is pledging for them to be able to even pay for any of this stuff. Or they're going to have to actually, do some real growth. Now, Brad Gerstner on the Olin podcast said that they're going to do 20 billion of revenue, or they're already doing 20 billion in the TTM, and he thinks that can double by next year. So even if they'll still lose money, they're on track to do around 150 billion of revenues by 2030, which would be incredible. And if that growth, doesn't keep up, then this is going to have an issue. But if it does, then hopefully there is a ability for them to pay on it. This is a chart that we've been looking at for the past couple of weeks, but take a look at this. 13 years it took the internet to get to 800 million users. ChatGPT took 2.5. This is not Grok. This is not Gemini. This is not this is not Anthropic. This is ChatGPT. I mean, that singular product seems to be the most successful startup idea of the past 2 decades. And it is the fastest growing idea that we've seen in terms of pure user growth. 800 million weekly users now are on the product. And Gemini and XAI, although they are far behind XAI, it's not like, or far behind ChatGPT, it's not like they're slowing down. I mean, they're growing pretty dramatically. Google said they're processing 1.8 trillion tokens an hour over the past 7 months. So, I mean, like, if all of this is going to take more computing capacity, and OpenAI needs AMD chips, Nvidia chips, and Broadcom chips, it's basically them admitting we need as many freaking chips as possible, and we are willing to work with anybody to get these deals. It's just they don't have the money for these deals. But I guess the money is inevitably going to come. Also, you have 2 updates this morning. Salesforce is committing $15 billion to develop San Francisco as the global hub for artificial intelligence. So you have another multi-billion-dollar investment from a tech company. And you have Google that's launching a $9 billion investment in South Carolina through 2027. So Google already announced they were going to do a $10 billion data center investment in India last week. And now you have Google saying we're going to do $9 billion. So 10 billion in one country, 9 billion in one state is what Google is planning to do. All these companies realizing they need more data centers, they need more land, and they are committing to different places to build out all those data centers. By the way, Grab got an upgrade today from Jefferies, 630 to 680. 630 to 680 is the price target. Analysts expect strong 3Q execution with margin and GMV acceleration across segments. Grab got all the way to 550 on Friday. I mean, we had some really crazy opportunities on Friday in terms of the dip. We're going to see if the market recovers going into this morning. But you do have some upgrades across the board. So there you go. Broadcom getting some love, up now 10.6% on the day. Let's finish up with Tom Lee, and then we will keep going from there.
That's perfect. So the people...
A good meeting ground between Bitcoiners and gold people.
Tom, can you just explain, though, to the extent we can understand it, within at least the Bitcoin world, just how much leverage there is in that system? Because I think one of the things that we were looking at Friday was the possibility, at least, that some of that selling, or maybe even a lot of that selling, came from margin calls at that time.
Andrew, there's always been a lot of leverage in crypto. I think that the volatility and leverage is what has drawn people into that space, especially when you get outside of Bitcoin and Ethereum. Those two are generally not held on margin. I mean, there is some leverage with what they call perpetuals, but that's why they held up so well over the weekend. But this liquidation that was triggered over the last 3 days, the estimates are at least 19 billion of liquidations, but it's probably understated. It might be 4 times bigger. It's the largest since 2021. essentially you have to go back to FTX. I think there is a lot of leverage in the way people use this product called perpetuals, which is trading on margin, like 3x, 20x. And it lurks and it's held through collateral. People like sort of pledging something that thinks it's safe, but when the price of that collateral drops, it triggers a cascade. Right. And so I think people talk about this thing called auto deleveraging. So a lot of leverage, yes.
Okay, so at its core, what Tom Lee's talking about right there is that there was massive, massive leverage in the system. I mean, I don't know how many people read stories over the weekend, but based on what I was reading, I mean, there are some people that took their own life over the weekend. It got bad, dude. People lost a lot of money. 19.5 billion is the estimated number. Tom Lee's argument is, wait a second, it's more than 19.5 billion. It might be 4x that. And as a result, you had a ton of crypto pain over the weekend, only for the markets to kind of recover, and the leverage wipes you out in the short term. But realistically, if it's not that big of a deal, then it ends up not being that painful. So it was a pretty wild week. AMD, what's going on? You guys are saying AMD is crashing. AMD, what are we seeing right here? AMD, I wouldn't say it's crashing. It's still up in the pre-markets, but there is a pretty big red candle right there, as you can see. Let's see if there's some news. It might end up actually crashing if this news is legit. I don't see any headlines on AMD. In fact, I see a bunch of price target increases, 205 to 275 at Mizuho. Is this because of the Broadcom deal? Is this because of Broadcom? Is this the reason? I feel like it has to be Broadcom. I don't see anything specific. I wouldn't say it's crashing, though. It's still up 1% in the pre-markets. It's just not up as much as it was. Yeah, it's probably because of Broadcom. Now, it's weird that it's because of Broadcom, because at the end of the day, OpenAI said they are ready to buy, what is it, basically $80 billion worth of AMD chips. So it's not like OpenAI is renegotiating on that. It's just apparently they need so much capacity, they're ready to buy 350 billion of chips from Broadcom. Maybe it's kind of bearish because they could have done a $400 billion deal with AMD and they didn't, and they only did like an $80 billion deal. But still, it's a decent amount of money going to AMD, so it'd be very weird to see that one kind of change in the way that it's happening. But AMD is slightly red from the highs, but still green for the day. But yeah, crypto was bad, dude. Crypto was really bad. $20 billion of liquidations. A lot of people lost a lot of money. Bitcoin and Ethereum doesn't look like, they're dead by any sense of the imagination. But if you were super levered on Bitcoin and if, it falls a $20,000 candle, you get wiped out completely. And some of these perpetual future contracts that Tom Lee's talking about, I mean, you can lever up to 250 times. You can turn $1 into 250 on leverage, which, that type of leverage and that type of margin, that type of borrowing to the tune of 250 times should only be done in a most sophisticated way, right? There should be a hedging strategy. There should be not the average person doing that, but nonetheless, the average person, if they are doing that, it can wipe you out really bad, especially if there's a random event like a Trump China tweet that plays out. Also, there were some issues with Binance's exchange. And so like Binance put out a note saying there were some issues that caused some of the problems. So there was just a lot of shit that happened on Friday, but it wiped out a ton of people. And I think, to some extent, Tom Lee's argument is it's not the worst thing in the world for some of that leverage to get out of the system, because you had a lot of frothiness, and to make the next move higher in the markets, generally you have to have a little bit of a pullback. And it seems like that's what we got on Friday across the equity markets as well. So that's what we got. Also, yeah, I agree with 30 and a wake up right here. Never take on leverage after a 3-year bull market at all-time highs. When you're taking on leverage, like you're supposed to take on leverage when something's at a bottom, theoretically, or something's so beat up that it has nowhere to go but up. When you take on leverage after everything's running, and like the inevitable conclusion is after 5 months, we haven't had a negative 2% day. We haven't had a negative 1.7% day. You're probably going to get some type of catalyst that creates a little bit of a sell-off, which is why I think most of us have not been buying that much until Friday. I mean, some dips here and there, but it's not like everyone's super eager to just put tons and tons of money into the market, because things were at an all-time high. A lot of people were waiting for a dip, and Friday ended up creating that opportunity. I think a lot of retail ended up buying on Friday. But as a result, when you lever up when things are already that high, it might not be the easiest to just go that much higher unless we get a pullback. And it seems like that's what we got on Friday. So there you go. Crypto was a little ugly. I saw a screenshot. Someone went from 15 million to 4K, heavily leveraged. Yeah, I mean, there was a lot of screenshots over the weekend. People just lost a ton of money. all over a Trump China tweet that wasn't even real, which is, it's wild. It is absolutely wild how it played out. I mean, I think we were all expecting a dip. I didn't think we expected on something. Trump just went back to his normal playbook. He was like, oh yeah, tariffs will create a dip. Let's do tariffs. It was like, oh, what creates a dip? Tariffs. And he went into tariffs. And so that is what we ended up getting. Here's some analysis right here from Beijing on China's attitude towards all this, and then we'll keep going from there.
Thanks, David. Well, after getting a very strong reaction from the U.S., the Chinese are defending their newly expanded rare earth curves. Today, the Foreign Ministry said the U.S. has continuously introduced a series of restrictions and sanctions against China, which have severely harmed China's interests. China firmly opposes this. So, in other words, from China's perspective, Beijing is merely matching what Washington is already doing. The Chinese have also said that they are going to take countermeasures against President Trump's threat of 100% tariffs. The Commerce Ministry over the weekend said that they pledged to take, quote, corresponding measures. At the same time, the Chinese appear to be trying to mitigate some of the negative response. The ministry had said that those curbs do not equate to a ban. There is speculation, though, as you could imagine, about why the Chinese would make this decision at a time when there are ongoing negotiations between the U.S. and China, and also when President Xi and President Trump are supposed to meet or expected to meet at the end of this month at APEC.
By the way, Basen said this morning that the meeting between Trump and China, which also was another reason why markets kind of took a hit on Friday, is still on. And Trump basically said that last night as well, that he thinks he's going to meet with Xi. So, I mean, as long as that meeting happens and it's not that hostile and you have both sides coming to some conclusion, I mean, we were promised a trade deal like 10 months ago. It hasn't manifested, even though Trump said in June it was like getting close. And so it's been a long time coming for a real negotiation with China. Hopefully by the end of the year that takes place. And if it does, that could be another tailwind for the broader markets if we finally get a meaningful trade deal that's centered around rare earth minerals. And maybe that's what ends up happening. Now, MP Materials, USAR, the only safety on Friday were these rare earth stocks that seemingly were getting the perception of having massive demand if China was going to isolate from providing the United States rare earth minerals, which is basically what Trump claimed. You had some of the energy names also be a little bit of a safe haven. All of them are up right here in the pre-markets. Look at Energy Fuels up 16%. My goodness. How about Oklo? Oklo 158 is up 7%. Now, Oklo fell to 147. It was still up for the day, even though it fell, which is how crazy Friday was. You had Nvidia down 300 billion in market cap, but Oklo was down like 2 billion, and it was still green for the day. So it's just quite incredible. But these seem to be the sectors the market's piling into off the fear of growth, financials, industrials, anything that scares them, they get into utilities, which ends up being energy and rare earths, which is quite incredible. And obviously, if you're in these names, then you've been doing well on these names as well. MBs, thank you for the super chat. Amit, are you adding any SPY hedges? I feel like the time to add SPY hedges was Tuesday or Wednesday last week. Obviously, in hindsight, that's when it made more sense given the SPY was at all-time highs. I don't think SPY hedges are a bad thing right now. It's just the put premium you're paying is going to be more elevated because the markets have come down. So I don't know. After you got the VIX spike and waterfall decline and now a potential recovery, like, does it really make sense to be buying puts at these levels? Potentially, if you're going out like a year, 2 years, and you just want a long time of protection. But realistically, those that hedged last week by buying puts, today is probably the day you close some of those puts and you take some of those profits off the table. In general, I think going into 2026, there needs to be some strategy of hedging, and we'll talk more about it. But I don't know if today's the best day, given we might get a decent recovery. And if we do get a really good recovery, then the put premiums become way cheaper. So that's when you want to buy them because insurance is cheap. Whereas today, it might not be as cheap. I ran all the data center plays. They are recovering. Look at that. I ran back to 64. Bitfarms is back above 5. It's at 479. CleanSpark getting some momentum. That's back at $20. I mean, all of these names continue to just do what they're doing. And it looks like the data center momentum is not slowing down, even with the Trump China tweets. Bloom Energy, I don't know why this one's up as much as it's up 24%. I don't think they had earnings or something. This one has to be catalyst driven. It feels like I don't see. Oh, I got the headline. Bloom Energy and Brookfield announced a $5 billion partnership for global AI infrastructure facilities. My goodness, dude. Every day it's something else. The deal marks Brookfield's first investment into its AI infrastructure strategy and will use Bloom Fuel cell technology to power data centers requiring massive, always-on electricity capacity. The company said a European site will be announced later this year. Dude, I get like whatever Trump tweeted about China, it's not enough. It's not enough to stop this tsunami of AI ecosystem spending that's taking place. By the way, this is the news that we didn't get to talk about yet. JP Morgan came out this morning, Tom Lee was mentioning it, and is launching a $1.5 trillion financing initiative over the next decade to back industries vital to U.S. national security and economic independence. Jamie Dimon said the U.S. had become too reliant on unreliable sources of critical minerals, products, and manufacturing. This is basically what Trump has been saying as well, calling for faster policy action and initiatives. And the initiative aligns with Trump's administration's push to strengthen domestic production and infrastructure and builds on JP Morgan's earlier $1 trillion commitment. The plan focuses on supply chain resilience, defense and aerospace, energy independence, and frontier tech like AI and quantum computing. I mean, this makes a lot of sense for JP Morgan if we are getting into an industrial build out that is fueled by data centers, land, and power initiatives. I mean, JPM, BlackRock, they're going to be at the center of wanting to fund all that stuff. And those are massive opportunities to invest in. And so you got JP Morgan right there committing $1 trillion. Bloom Energy up 23% on the day on that Brookfield deal. That's a massive Brookfield deal, $5 billion partnership. I mean, Bloom Energy was tossed into the meme stock ETF that Roundhill launched last week. And I don't know that much about Bloom Energy, but I mean, a $5 billion deal with Brookfield to ensure data center capacity and expand AI initiatives, that does not seem meme-ish to me. It is quite incredible how some of these companies are continuing to get more momentum. Let me see what you guys said in the chat. I did a poll on green or red day. 81% of you say green. 81% of you say green. I'm assuming some people probably think it's a bull trap. We'll see in about 2 minutes when the market opens if this has the resemblance of a bull trap. But if not, maybe we go higher. Wow, gold 4,090. Holy crap. Gold, my goodness. Gold futures are already above 4,100. Gold futures already above 4,100. Silver, by the way, I think it's crossed 50 if I'm not wrong. Silver, I think it was at 50 last night. 50 right here in the pre-markets again. I mean, this is one of the most incredible years we've seen for precious metals. We have not had a 50% year in gold in a long time. But there is silver. I mean, it's taken 11 years for silver to get back here. But here it is. Incredible, incredible, incredible stuff. All right, we got a minute until the market opens. Put in the chat what dip you bought on Friday, if you did take advantage of any dips. And we're going to see if those dips end up being rewarded. And if they do end up being rewarded today, it will be very nice to see. Again, retail has continued to buy the dip. That has been the strategy. Friday gave a pretty strong opportunity. We're going to see if that opportunity is rewarded today. Trump pivoted on China, said literally do not worry about it. As long as he is not really bluffing here on the China pivot, then it looks like there is an opportunity for the markets potentially to have a massive amount of buying today, as a lot of people think maybe this is the dip they've been waiting for. And as a result, we might have a chance to recover, maybe not fully, but a decent chunk of what we lost on Friday. Here we go. Thank you, everybody, for being here. Monday, October 13th, 9:30. Snack market is now open. All right, wake your ass up. Let's get into it. Nvidia is up 3% on the day. There you go, 188.80 on Nvidia. Again, 195 was that all-time high. Let's see if we can get back there. Palantir, that's up 1.63%. That is green. Hoodie, 144.75. That fell all the way to 132. That is back to being green. The S&P 500 up 1.2% on the day. Again, 673 is that all-time high. If we get a recovery anywhere near that 665 level and close above it, I think that would be super bullish. But there you go. S&P, that's up 1.2% on the day. SoFi is up 3%. Grabby Grab fell to 550, back up to 607. That's up 3.5% on the day. Google, that's up 2%, fell all the way to 232. Reddit's up 1%. Amazon fell to 210. That's now at 218. Meta right there is up 1%. Salesforce up 0.5%. PayPal fell all the way down to 67, back above 70. That's up 1.2% on the day. Apple right there is up 1.3%. SMCI is green. How about Open Door? Open Door is green. That's up 1.72% at 770. Tesla right there, 2.4%. 425 fell all the way to 410. Robinhood right there at 145. Where is Rocket Lab, which got to 73.50 on Friday? Rocket Lab 68.43, back trying to get to that 75 level. Bitfarms is green, 13% on the day. EOSE, another energy name, that one is also green. Wow, 13%. My goodness, take a look at that. Energy continues to be one of the sectors that does very well. Bloom Energy also up 27% on that Brookfield deal. Fantastic. Broadcom, for those that are just joining, signed a 10 gigawatt deal with OpenAI. It's up 7%. It was up about 15%, so not up as much as it was in the pre-markets, but that is another deal with OpenAI. That stock right there, up 7% on the day. How about Nebius? This fell all the way to 110. Nebius right there, back up to 137, basically at all-time highs. 141 was all-time highs. ASTS, did we cross 91? ASTS 88.77. 91 was all-time highs, but that one is up 8% on the day. HIMS is up 1.63%. Uber's up 1.5%. IREN is up 7% on the day. Continues to go green. I mean, this is just a phenomenal recovery so far. I'm not saying it's a full recovery, but it's a phenomenal rebound post a 3% waterfall. And again, one of the theories that I have today is a lot of money across the entire market. Retail investors, fund managers, institutional managers, they might be thinking this is it. This might be their final opportunity. I mean, if we get into a strong earnings, it's going to be tough for the market to go down another 3-4% when earnings are crushing it across the board, from financials to industrials to utilities to tech companies. So it's going to be one of those days where maybe money, even though the banks are closed today, the credit markets are closed today because of Columbus Day. TSM right there is up 5%. You still might have a lot of money that comes into the broader markets. And maybe that's a tailwind. If the credit markets are closed, money might end up coming into the stock market instead. Rocket Lab back to 70. Rocket Lab back to 70. My goodness, dude. My goodness. Absolutely incredible. BMNR, we had 54. BMNR is at 54.70. Not too bad. That's up 4.3%. Fell all the way to 47. Again, Tom Lee bought 200,000 Ethereum over the week. I should say over the weekend when Ethereum really dipped. And Ethereum right there at 41.6. We don't know his exact average, but he probably got it anywhere below 37 to 3,800, which is not too bad given Ethereum was at 4,700 last week. Oklo, is that one moving? Probably with Bloom Energy, that one's moving. Yup. Wow, 11%. That's all-time highs on Oklo. From 6 to 160. What a run. What a run. APLD, that is also moving as well. Another massive, massive move on the day for APLD. That's up another 15%. That stock is hitting all-time highs. It was at 35 on Friday. Then it took a hit when the Trump tweet came out. And now it's right back here. MP Materials, that one also moving as well. There you go, 91.23, up 16%. USAR probably following. Yep, USAR right there, up 22%. My goodness. How about Amcor? We did buy this one last week. We are at 29.80. That's up 5.5%. That one fell like 10%. So that one's recovering 50% of what it fell, which is not too bad. Robinhood right there at 143.61. Big Bear AI, I think, signed a partnership this morning with a government agency. That's why that's up 12%. We did have a politician buy that a couple months ago, 50,000 worth of it at around $6. So that has been a bit of a catalyst for it as well. And then SoFi right here, up 2%. Reddit slightly flat, and then Grab up 3% on the day. I think a lot of people that were down a decent chunk on Friday, you're probably recovering at least 50% of what you were down from Friday, which is good to see. We do have some red candles on some of these names, so you do have some selling pressure. Nvidia getting a red candle right there, but overall not too bad. AMD at 219. AMD at 219. AMD did go down real quick in the pre-markets, back to 220 on that Broadcom news, but it looks like it's back. You're going to have some of the Broadcom officials come live soon, and we'll get to hear from them on this multi-year partnership to deploy custom chips. But Broadcom getting the benefit of this right here. That's up 7%. CoreWeave is dumping. Where's CoreWeave? Yeah, CoreWeave goes red. All right, so you're seeing some of the first names go red. The VIX is down 6%, still above 20, but the VIX is down. Not a massive decline, but it is down from where it was on Friday. Tesla right there up 1.8. Hoodie losing 146 back to 143, and then Palantir losing 179 back to 176. I wouldn't say it's a full-on reversal. S&P still up 1%, but you are seeing some red candles across the board. Now, again, the underlying tone of a lot of the bears today will be that this is a dead cat bounce and you should sell it. So I think the market will tell us over the coming hours if this has any momentum behind it or if it is a dead cat. And maybe Trump's tweets are not enough for the market to be convinced that there is momentum. So we're going to have to see. But overall, we are at least not continuing to fall as aggressively as we were on Friday. Nvidia right there, 187.76. The S&P, 1.08%. All right, we have the OpenAI people. Let's hear from them real quick and see exactly why they just signed a basically $400 billion deal with Broadcom.
We need way more compute power than we are still on trajectory to build. And so I think that there's a whole industry that still needs to be created in terms of how to have both the power and the computational power available to power the AI revolution that we see coming. And so part of what we're looking for here, part of what we've been working with Charlie and his team on, is how to actually build chips that are customized for specific workloads so that we can take our knowledge of how to build the AI models and combine it with the best possible way of implementing that into silicon.
Actually, Charlie, welcome aboard here. I've not met you. One of the things that I think people are skeptical about is the idea that still one more company has to be involved because there's just so much demand. And I know your company as being about maybe the most hard-nosed company in Silicon Valley. I think that's fine. I joke with Hawk about that. But the fact is that your company is not idly thinking, we're going to do this thing, no money's exchanged, but we're confident that OpenAI is going to exist. Will you please dispel a narrative which just says that this man and his company are spending like drunken sailors and it doesn't matter what they do because build it if they come. Whereas I know Broadcom is saying we better meet this darn demand or else we're going to be left behind.
Yeah. Well, first of all, Jim, thank you for having us here. It's an honor and a pleasure to be here with you and Greg. At Broadcom, actually, we've been building and enabling the AI infrastructure for over a decade. So it's not new experience for us. But what's exciting here with Greg and the team is we're actually having a very unique collaboration. As you said, it's a co-development. And it actually what I call a trifecta. So the first thing that we do is exactly that custom AI accelerator or custom GPU or XPU that Greg talked about. That's where the compute is. The second piece that we put together is the network. You need to connect all of these XPUs so that you actually can scale them. And one of the coolest things that we do is it's based on open standard Ethernet networking. And the best thing that...
Okay, so we'll get back to that in a second. He's not fully answering the question yet. I mean, quite frankly, no one cares about the technicalities. They care about how they're going to finance this. So, at the end of the day, I think everyone feels a little bit of just uneasiness that OpenAI is part of all these deals and they're somehow coming up with billions of dollars out of nowhere. But if there is going to be an ROI, that's going to be how it ends up playing out. You got the S&P. There's that big red candle right there. Folks, it's not a full-on bull market recovery yet. I mean, you have a decent amount of red. PayPal loses its momentum. Bitcoin and Ethereum, they lose their momentum. Palantir just went red. You're seeing a ton of different names that are getting hit. I cannot, I don't think anyone can say with confidence that you're seeing a decent level of upward swing. I mean, we are green, but it's not the type of green that is a full-on pivot. Again, DJT hasn't fully said it's time to buy. He hasn't literally said that. It's just the explicitness of the China remarks yesterday, one could argue might be the signal. The question is, will it manifest into that signal? And we have to see. We have to see. Doug says, you got to remember Liberation Day took a few days, dropped on 4.4. The big recovery was on 4.9. That's also a good point. I mean, expecting the recovery today might not be as easy. It might be asking for too much. But S&P still holding 1. If we give up 1% on the day, it goes down to only up 0.5%. Then you would see some real sellers coming in. You're not really seeing that yet, but you are getting that in certain pockets. MicroStrategy bought 220 Bitcoin last week at the beautiful price of 123,000. So unfortunately, they did not get the Bitcoin dip. Archer right here, that's down. Intel, that's down. Verizon's down a little bit. And then Dell is slightly up after increasing their financial projections. Palantir trying to go back to green. All right, let's go back to Broadcom and see. And get some more details on that deal.
That comes on top of this is the software. And that's where Greg and Sam and the team come together. So when we combine all of these things together and we fine-tune them, we actually create the best AI platform that delivers the highest performance at really unprecedented power, as you were saying, and costs. And so we're very excited about this. We've been doing this for a while with Greg and I. We actually talk about it multiple times a week, and we see this happening.
All right, so Greg, I want people to understand that there's an NVIDIA.
Actually figuring out how to build this compute is extremely difficult, and it's going to require financing in different mechanisms. And so we've really been going to the industry to say, hey, how can we possibly get ahead of this sort of avalanche of demand we see coming our way?
Avalanche of demand, not hoping for avalanche, but avalanche.
We are currently being swept along by the avalanche.
Like between last month and this month, how much more business do you have?
Quite a lot. So, I mean, first of all, Sora did not exist a month ago, and it's now the number.
Sora's pretty cool. I've been playing with it.
Oh, I'm glad to hear it. It's so much fun. It's so much fun. And I think it just shows you how quickly these AI products get adopted, right? It's like we've never seen growth like this. So ChatGPT was the fastest growing consumer app in history, but actually Sora is now even faster than that.
Incredible. Well, it was easy to download. My colleague David Faber has a question.
Yeah, I guess I'd come to you first, Greg. And, you know, my question is simply, is this going to reduce the cost per token over time? I mean, I know in a podcast I think you guys have just done to sort of explain the deal as well. You talk about it leading to much better performance, faster models, and cheaper models. Is that sort of the goal here?
Well, I think of it in two dimensions. So first of all, we definitely are decreasing the cost of each token at a fixed level of intelligence. And we've been doing that for years, but having our own accelerator that's really tuned for specific workloads will let us really accelerate that, get more power efficiency, everything that you'd want. But even more importantly, we will be able to serve even smarter models. And so what you actually really want is you almost want the amount of dollars that people will spend on AI to increase because it's cheaper to get to the same level, and you just want way more of it. You can actually reach new heights in order to solve new kinds of problems that were totally impossible otherwise.
And, you know, on this.
So an avalanche of demand, Palantir right there, continuing to go red. Hoodie is very close to going red, but still up 2% on the day. Dude, an avalanche of demand. Basically, OpenAI is saying we are building and partnering with all these companies, Oracle, Broadcom, AMD, Nvidia, because we think there is so much demand that is coming up that we just want to be ahead of it. And as a result, that's why we're signing these deals. I mean, and it seems like they're pretty confident about the amount of demand that they're supposedly going to get. By the way, the S&P actually making a nice little green candle right there, 1.2%. I think that's close to the high of day that we have on the day. So that's really good to see the S&P getting that momentum. But if that's the case, then you either believe them or you don't. Palantir just flipped green. And if you believe them, then I guess Broadcom and Oracle and Nvidia and AMD are going to benefit. They're going to benefit from Nvidia. The rare earth mineral company is massive. MP Materials still up 12% on the day. USAR, look at that, up 22%. LEU, Centrus Energy, a lot of these names just continuing to hold on. I think we got a little bit of a algo move to the upside just now. Pretty much everything just went green. We're going to see how much of it can hold. Again, it might be very, very choppy. But we were getting some red about 5 minutes ago, and everything that was red just flipped, which means you're likely getting algos that are going to start buying, and we'll see if that can continue. But you're getting some love right here. Oklo still moving as well on the day. That one, 164, hit 165 at some point. China, by the way, they came out and they just said threatening high tariffs is not the right way to deal with China. That was one of the ministry spokespersons like 20 minutes ago, just put out that statement. And they also said China will do what is necessary to protect its legitimate right and interests. So basically China is saying the same thing they said on Friday, which is, hey, like, let's find a way to get a deal because you're not going to scare us into acting differently because with high tariffs, which hopefully is, you know, something that Trump and them can negotiate on meaningfully. Iran right there, 63.73. That is up 7% on the day. Volume might be down due to lack of money, so algo is going to play. Yeah, that's a fair point as well. Volume could be down today. Again, it is Columbus Day. You do have a lot of financial institutions that are just not trading today. And that could be another reason why we're not seeing as much volume. Dutch Bros, how's that one doing? This one's been down for a bit. Dutch Bros, that's up today. Wow, 7%. I don't know if they got an analyst upgrade or something, or maybe that's just a recovery from Friday. But Dutch Bros getting some love. When I asked what stock people bought the dip on, I saw a lot of BM&Rs. I saw a lot of Amazons. I saw a lot of Grabs. I saw a lot of Google. So kind of your typical clients that end up getting momentum. Nvidia right there, 187. Looks like that was what people ended up buying. again, in September, $100 billion was spent by retail. And $100 billion was spent when things were relatively decent in September. So the idea that retail didn't come in on Friday, to me, is unlikely when things got really bad, because that's when people start, or at least that's when retail this year has bought. By the way, Goldman Sachs, they downgraded PayPal from neutral to sell. They set a price target at 70. I mean, just when PayPal starts to get some momentum, you have Goldman Sachs come out and say, yeah, we don't like it. We're downgrading it to a sell from neutral. So you do have a little bit of downward pressure on PayPal as well, even though it is recovering from yesterday. How about Quantum today? What is going on with them? S&P right there up 1.2. SoFi's up 3.6. QBTS, D-Wave, that is up 2.5%, getting a recovery. Rigetti also getting some recovery. That's up 9% on the day. And then IONQ, that's getting some love, up 6%. TMC, this is the metals company, another very important company when it comes to rare earth minerals, copper, cobalt, nickel, all that stuff. That's up 17% on the day. That one, I guess you can put in the bucket with USAR and MP as a company that will be perceived as getting massive demand based on rare earth metals, and it's getting it right here, up 16% on the day. And again, JP Morgan is tomorrow. A lot of the banks are tomorrow. They've got to come. I mean, that's why that JP Morgan $1 trillion announcement came out today, because it's likely that they're going to announce a ton of new initiatives tomorrow on their earnings. So tomorrow's going to be a massive, massive day to see how these companies perform. And United, J&J, Goldman, JP Morgan, if all these guys, BlackRock, can put up some good numbers, the market likely is not going to be too upset. Tesla right here going green. That's up 2.2. S&P 1.25. Very close to breaking the high of day. If it does, that would be very nice to see. We potentially got to wait out for that 1030 slam as well. Let's take a look at the heat map. We are, wow, look at that. Pretty much green across the board. It's not a full recovery, but healthcare is the only thing that's down today, along with consumer defensives, Walmart, Costco, PG, etc. Everything else, tech and semis, led by Broadcom, massively green on the day. I think SMCI will get a tailwind from this Broadcom deal. I think all the GPU service companies, SMCI, Dell, etc., HP, they should get a tailwind. It might not reflect right now, but SMCI has got to put up some really good earnings. I mean, Dell already increased their financial projections. If SMCI does that, then that could be the tailwind SMCI needs to get a bit of a boost. Stock draft, Matt's at 45. He's still at number 1. I'm at 41.7. Steve's at 7. Tanner's at 20. And then Chris is at 12.34. Anyone who wants to see the whole thing, go to 2025stockdraft.com. And you can look at all the individual holdings. But Matt right there is up 45%, still in first place based on ASTS and Rock Lab. All right, let's finish up with that Broadcom interview. And let's see if we can get a little bit more details out of this deal.
How you actually describe the size of these efforts. Will it be there for you? And can you just put in perspective what we're talking about for our viewers in terms of the time and effort that will take?
Well, the way to think about this is I think we are embarking on the largest infrastructure build in history. Right. I think that the kind of infrastructure that everyone is building, it really makes programs like the Apollo program almost small in comparison, which is a really wild statement, but it makes sense because the economic return is there, because this is really going to be the underpinning of our future economy and is already showing the promise and benefit to people's lives. And in terms of actually producing this power, I think that the power industry is one that's in America is actually very slow to update to demand. The growth there has been very slow over time. And we've been spending a lot of time talking to executives, talking to these companies, saying that, hey, we need far more power than has been planned for. We're starting to see the response in the market, but our view has been for the past couple of years, we see this wave coming, and we've spent years really trying to say, what is the way to increase every single part of the supply chain? So this deal is part of that, of trying to say, let's build chips that are tuned for workloads that are more power efficient, but also how do we have every single part of the supply chain respond to the demand that we see?
Now, Charlie, we're talking about the biggest joint industrial project in human history.
Correct.
Something that exceeds far versus what, say, the highway system, the interstate highway system. Right. There's a lot of incredulous behaviors.
Will help us in our daily job as engineers. We said, let's do a proof of concept. We took about a dozen engineers. The result was good. Last year, we said, you know what? Let's take a couple of projects. Applied it to a couple of projects. We put tens of engineers now. And you know what? The result is actually impressive. So this year, we're actually going to fully adopt this, and we expect productivity for our engineering team to be 20 to 30%. So imagine if you have 10,000 engineers, and now suddenly you use these smarter tools that are optimized, you can get 10 to 20% more productivity.
But each single engineer being kind of have his own assistant going from 100 to 120%?
Correct, correct. So you will use actually these custom accelerators and the networking and the AI cluster, as well as obviously the software to, for example, for code assist. And once you apply that, you get so much better productivity. So instead of a key architect sitting down and spending time on doing verification or testing, we actually can take his time or her time to actually write smarter code and let these agentic machines do a lot of the stuff for us. And so it's going to change the way we actually work and live. And that's why we're excited about it. And we're seeing this journey. Just like you said, the railroads took a century to build, right? The internet took 30 plus years to build. This is going to take many, many years, probably a couple of decades. But we will see smarter and better capabilities going back to the trifecta, the custom compute, the network, and the stack that we're co-engineering together.
Software engineering really has changed already this year, just over the course of the past 12 months. It's just night and day. And I think that now if you're not using AI as a software engineer, you are just far less productive. We see this internally, that the difference between people who use AI and don't, that there's like a 70% gap. Like these numbers are real. We see it in the productivity stats. But we're starting to see that across every endeavor of human business. Even for designing our own chip, we applied our AI to it, and we would actually have incurred like a month schedule slip if we didn't do that.
David, you have a question?
I mean, again, wow, S&P 662. Okay, there you go. Making some moves. It's not, even if individual stocks are not kind of following the trajectory, it is really nice to see the S&P get above some of those levels. 662 on the day, up almost 1.5%. Again, the Broadcom deal feels super bullish. I think the number one question everyone's left with is just, where is the money coming from? And Broadcom right there up 10%. You know, Jensen did clarify last week. Jensen tried to make the argument that this is not circular financing because there is an ROI on all this money. And again, what is Nvidia going to do with their $60 billion? Like, they have to put it somewhere. Iran right there up 7.5%. They can't buy back their stock. They can't give a better dividend. I mean, they could do those things, but it's not really beneficial. They're going to have to put the money to use. And so if they're investing in the AI ecosystem, overall, if there is an ROI on that ecosystem, there should be an ROI on those investments at the end of the day. So, you know, one could argue it's circular financing, and it definitely feels circular to an extent. One could also say, hey, the money's got to come from somewhere, and inevitably the money's going to come from the biggest players in the world. But as long as that money delivers a return, which is the number one thing everyone's waiting for over the next coming years, then this should end up working out. Iran right there up 8% on the day. AMD recovering everything it lost in the pre-market. That's up 4%. So it looks like it was a little bit of a flash crash on AMD after the Broadcom news. That one goes green. And then Broadcom right there, 354. That's still up. TMC, again, massive day for this guy, up 20%. What is this guy doing year to date? I think we've talked about this a couple times. Wow. 800% year to date. My goodness. I do not have a position in them, but for those that did take a position, rare earth metals and rare earth minerals. I mean, minerals and metals. Those two have been massive, massive components of the supply chain that Trump has been trying to essentially securitize within the United States. Lithium Americas, that's also up 11.2%. And as a result, being in the energy stocks, being in the rare earth minerals and metal stocks, those have done very well. Very, very, very well. Now, are they buys right now? I don't know. I mean, they've had a massive run. Now, granted, if we're going to continue having a run going into 2026 because there's so much demand for that, then, you know, one could argue they are buys. But I think there needs to be a little bit more of a deep dive to see, are these companies, do they actually have the demand that is necessary to kind of live up to the hype? Oklo right there, 170. I mean, again, is Oklo a buy at 170? No, but Oklo wasn't really perceived as a buy at 140. It's just the demand for energy seems to be catching up with the perception of the stock, and that's what's leading to Oklo getting some love. You know, historically in markets, when a company outruns, the most important companies in the world, like an Nvidia and a Meta, and the company has zero earnings, zero revenue, that company tends to be in a bubble. I wonder if that actually plays out in this sort of AI ecosystem over the next decade. Because if we're going to need nuclear energy and Oklo is going to get a couple $1 billion worth of deals, and it's a $20 billion company, it's going to trade at a couple times, 5 times, 10 times sales, which is an aggressive price to sales multiple, but it's not egregious, especially if their demand is growing. Maybe Oklo gets to hold on to this valuation. Maybe it legitimately gets to grow into the valuation. And it's potentially not the same as it was in previous markets where a random stock outruns the most important companies in the world. Because those stocks tend to crash badly. Maybe that's not the case. Maybe there's just so much demand. That's not how it plays out. S&P right there, 662 again, 662.14. Grab holding on to 6. Not really getting below there yet. Bitcoin back to 115. That's nice to see. And then ETH trying to get back up to 4,200, which is also not too bad. Hoodie not really recovering as well as it did last week when it dropped all the way to the 140s, gapped up back to 155. Right here, you're at 140. Now, it is up from 132 on Friday, so that is a decent recovery from the low 130s. I think on Hood also, dude, like I've been pretty transparent about this. I think Hood just got really expensive and it was outrunning its earnings growth. I mean, at 150, as excited as I was for it, and I think all of us were happy, it was also like, dude, really 120 to 150 in a week off nothing? There was no real catalyst. So I think Hood normalizing in the 140s is good. It gives it a chance to run on earnings if they have a good earnings, and I think they're going to have a pretty decent earnings. And I think this is actually really healthy for Hood. Now, as Hood to buy the dip right here, you got to imagine what the end of the year looks like. If S&P gets to 7,000, if Bitcoin gets to 150, then yeah, I think Hood's an obvious buy the dip. If it doesn't, might end up consolidating at these levels. So we're going to have to see. We're going to have to see if that plays out. But if you did buy the dip on Friday, there were some good opportunities. S&P right there, 662.30, high of day. TMC as well, 11. That's also high of day. Iran 65, Oklo 170. Amit, gold is up 54% year to date. The market still likes gold. Why? Well, again, we were covering it in the morning. S&P moving now. Wow. S&P really moving up 1.45. There might be a lot of crypto companies that are buying gold, including Tether, which is creating a stable coin out of gold and backing it 1-to-1. So there could be a variety of reasons for why gold is getting the run that it's getting. At its core, I mean, the argument that we've been talking about for months now is that, I mean, cash is trash. And you have the biggest financial institutions in the world saying, like, your dollar. The dollar is not as exciting. Along with central banks that are, transitioning into a lot of gold versus treasuries as their reserves. But regardless, you are seeing a momentum in precious earths, copper, gold price, et cetera. And we have not seen that in a very long time with gold, silver, and copper moving the way it is. And that's why these rare earth mineral stocks are moving as well. 662.50 on the S&P. Again, a new all-time high, or not all-time high, a new intraday high on the day. Cypher and Iran also getting some love. Cypher right there up 12%. And Iran 65.60. Iran hit 70 last week. Look at that. 10% move, dude. Again, when you have this type of a Monday morning, it tells retail to continue buying the dip because the dip gets rewarded. And you're going to need a nice little rug pull to get people to be annoyed with anything they bought on Friday, but you're not seeing that yet. Maybe you'll see it this week, but you're not seeing it yet. We're also going to get the CPI from the BLS on the 24th. If that CPI is good right before the Fed meeting and we get a cut, again, I think that's why the theory over the next couple of weeks is markets are going to be like, wait a second, earnings growth is good, rates are coming down, and Trump-China is a non-issue, but the market is still down 4% from where it was last week. Maybe that's a buying opportunity. And that's where money comes in. Pound right here, 177. I will say, though, it obviously does feel like certain stocks are frothy. Like Rocket Lab, as much as I love Rocket Lab, I don't think $70 like makes sense quantitatively. Like, I just don't. Like, and I think Matt Money would agree with me. Matt's a big Rocket Lab bull, and he would probably say, yeah, it's probably pushing a little bit. Same thing with Hood. As bullish as I'm on it, I don't know if 150 really makes sense until they put up the earnings growth. So the question then becomes, do these stocks just continue to hold their multiples? And do they put up the earnings growth that allows those multiples to be justified? Or are they just running for the hell of running? And I hope it's the former versus the latter, because that's a more tangible structural reason why these stocks are getting a multiple versus, just money entering into the system, which is inevitable. Money's going to enter the system. But, if you're in a stock for a long time, you also want it to be based on a more fundamental catalyst. S&P 663. Now she's really moving, busting through 661 and 662. There you go. 663 on the day. Now, granted, if Oklo is going to go to 200, I mean, you're going to have Rocket Labs and Hood are, much better companies, in my opinion, than an Oklo, just on an earnings basis, on a revenue basis. They actually have a little bit of money coming through the door. So those names probably do continue getting a premium if a name like Oklo gets a premium. 17% on the day. I mean, like, this is, I don't know, dude. This is weird. This is weird. You think on a day that flushes out the entire system, the names that are a bit frothy don't get a massive move, but that's the exact opposite. You're getting a massive move on these names on a Monday morning. I don't know if that's bullish or bearish. I mean, put in the chat, is that bullish or bearish? What do you think? Is Oklo gapping up 17%, making all-time highs after a flush out, bullish or bearish? I mean, on the surface, it looks bullish. Underlying strength of some of these names kind of feels a little bearish because it's like you don't want to see some of that stuff happen. It kind of, here's the thing, it kind of makes no sense, but it also is potentially bullish. And that can happen, right? Sometimes things can make no sense, but they can also be bullish. And I think that's what we might be seeing right here. Or it's indicative of a bull trap. I mean, we've got to see. We've really got to get a lot more data. But S&P 500 right there, 662, got all the way up to 663 on the day. Now, if you own Oklo, it's super bullish because you're probably very happy. And look, that's great. The question is just, can those stocks hold those multiples? Big Bear, by the way, up 17%. I think Big Bear got a partnership this morning. That's why that one's running. This thing fell below $5 2 months ago. So Big Bear and T-Second partnered to deliver AI-enabled edge infrastructure for the battlefield. Okay, that's the partnership. I don't know if there's any numbers on this partnership, if there's any amount of revenue or money, but regardless, the stock is getting a ton of a pump. And then TMC, again, TMC seems to just be following USAR and MP. And that's why those stocks are moving higher. It's weird, dude. Very weird across the board. But again, like, I also think you can't fight it, right? I mean, as long as there is not froth in the most important companies in the world, and this is, I think, like the most objective take anyone can have on this, as long as there is not froth in the Amazons, the Metas, the Nvidias, the Googles of the world, we're okay. You might think there's froth in Big Bear. You might think there's froth in Quantum. You might think there's froth in Oklo, and trading in and out of it. And, retail's made a killing off a lot of those stocks. But even if you think they're frothy, I don't know if you can go far enough to say that that level of frothiness means that the market is topped. I don't think you can say that. I think there's too much earnings growth in the most important companies, along with a Fed that's easing, to be bearish on the broader market, even if you think there's frothiness in certain sectors. And by the way, if there is frothiness in certain sectors, again, if those sectors go to zero, who cares? If Big Bear AI goes to zero, who cares? It's $8 billion in market cap gone to zero. Like, that's not going to affect the market. Neither is Oklo. So it's one of those. Now, if Nvidia goes to zero, that's a different question. But like that, where you don't, as Tom Lee said this morning, Nvidia trades at a cheaper multiple than freaking Walmart and Costco. And Nvidia right here trying to go back to 190. That's up 3.6%. It doesn't feel like that one is that expensive relative to a lot of these other names in the market. UNH right here, 356. That's green as well. That broke 370. That right there is at 356. TMQ, this was the company that Trump is taking a stake in based on that Alaska deal, 16%. That one also continuing to go green. The meme stock ETF is up. I would imagine it's up today. Yeah, wow. Meme stock ETF up 11.79% on the day. This one has the Oklos, the BMNRs, the ASTSs, HIMs. A lot of those names I don't think are meme stocks, but they have a ton of those names in there. That's up 12.2% on the day. ABAT, is this the Trump company? No, this is American Battery Tech. Wow, ABAT, 50%. American Battery Technology is a technology company which engages in the development of marketing of lithium-ion batteries. 50% move, folks. I don't know if there's a catalyst or if this is just pure rare earth metals that are moving. We are proud to share that after more than 2 years of dedicated work, we have completed all required baseline studies and submitted the reports to the U.S. Bureau of Land Management. It looks like they completed some phases of development that they needed to start mining more lithium. It looks like that's the announcement today. And that, along with the general rare earth metals catalyst, is keeping the stock higher. 49% on AB. I didn't even know this company. I feel like I heard of it a couple weeks ago, but I didn't know too much about it. ABAT right there, 48%, along with USAR and MP. That's up. USAR is up 14%. What about CRML? That was also another company. Critical rare earth metals, 21%. That's up 41% on the day. My goodness. This one is not even getting the Trump stake. Trump was supposed to invest in these guys. That was the rumor by Reuters. They came out and said, we're not doing it. That one still is up 41%. Goodness gracious, bro. This is incredible. Grab right there, 596, and then Google at 241. Gold is still moving as well. Gold not stop. Wow, 41.13 on gold. I mean, it's not slowing. It is simply not slowing down. By the way, Palo Alto got an upgrade today to 248 as well. So Palo Alto getting some green. Goodness, dude. Gold, rare earth minerals, and energy. Those have been the plays for the past. I mean, if you wanted to make freaking 30 to 50% on your money, if not much more than that, those have been the plays for the past month. Really, for the past couple of months. And you're continuing to get some green. Yeah, I mean, obviously, we're going to have to look into rare earth minerals a lot more. I mean, the market is telling us that these are the stocks that. I don't think those are frothy, by the way. I think that obviously quantitatively, if you look at the market caps and the revenues, they might be frothy. But this is a sector where it looks like a lot of money is getting ready to be deployed in. And it looks like there's a lot of deals being ready to be made as well. Now, granted, I haven't gone through the financials of a lot of these. USAR market cap is $4 billion. I mean, $4 billion is not the most, it's not the biggest company in the world. So we're going to have to see what their financials look like. But still, it looks like these guys are small and they're getting a bid based on what Trump is trying to do. S&P 662, that one continues to go green. Here was some analysis from the Olin podcast on kind of why they think gold is continuing to run.
Important net new buyer, it's Tether. Tether's been issuing a stable coin called Tether Gold, where they'll actually custody the gold on your behalf, and it's the amount and volumes of it are rising. At the same time, central banks are rebalancing. And then yet at the same time, you have a lot of macro funds that have essentially decided that central banks aren't to be trusted and they don't know what to do. And so they're not necessarily long bonds, and they're not necessarily long currencies, and so they're long gold. So I think it's a mixture of things. There's no panacea explanation. But if you had to put it into a couple buckets, it's net new speculation, net new stablecoin related issuance, and a loss of confidence in central bank policy around the world.
And this is, in some ways, a good backstop, Brad, for governments.
There you go. That could be at least some of the explanation. Also, China buying is a good point for why gold's getting green. If we end out the day, S&P up 1.5%, I think all of us will be happy. I mean, we were down 3%, recovering 50% of that. I think people would be relatively happy. But the real story is every other name that is getting a massive move that really is not, part of the S&P or part of the broader market index of like the most important companies. The Roundhill meme stock ETF going up 12%. That tells you kind of where the sentiment is the Monday after a 3% drawdown. Bitmine right there, 54.54. That's up 3.5% on the day as well. APLD, that's about to hit all-time highs. They had a great earnings. They had a phenomenal earnings. That's up 14% on the day. And look, if companies like Applied Digital, which aren't the biggest companies in the world, are putting up good earnings, again, it's like I don't think Meta puts up crappy earnings. I don't think IREN puts up crappy earnings. And if they don't, those stocks are probably going a bit higher. Rich Tech Robotics, that stock right there up 11%. All right, so I guess here's the question. Let's do this question in the chat. Let's do a poll on this. How are we feeling about some of these names that are running? So let's do this as a gauge. By the way, I think about 80% of you said we're going to be green for the day. After a 3% drawdown, how do you feel that meme is up 11%? Bullish, bearish, doesn't matter. AKA, after froth getting kicked out of the system on Friday, the meme stock ETF being up 12% likely means that there's a little bit more froth coming in. I kind of lean on the side of it doesn't matter. I don't know if you can go bearish on that. I really don't. And I think the bears will point to this being the bull trap because of, entities like meme stock ETFs being up on the day as much as they are. But I don't think that's necessarily bearish. I don't think that's super bullish either, but it's bullish in terms of just like more market momentum. I think it's almost a nothing burger, even if it is hard to explain, which is the unique situation and the differentiated situation this market is in, given this AI tailwind in the midst of the Fed cutting. It's hard to be like, yep, this is completely bearish. And a lot of those aren't true meme stocks. That's also true. We have more gamblers that are continuing to gamble. Tess says, well, they aren't meme stocks, so it doesn't matter. The ETF is just an attempt to slander retail. That's actually a good point. I mean, a lot of those names are not meme-ish. I think they just stuck them in there because they see people on Twitter talking about them in retail, which could be the reason. S&P still holding on to 662. EOSE, that's up 17% on the day. Amazon should be up, not Oklo. So this, I can totally resonate with this sentiment. And this is that sentence right there is, I think, what people are upset about. Amazon should be, maybe it doesn't have to move 17%, but Amazon should be up way more than a company doing no revenue and no earnings. However, Amazon's also a $2 trillion company. Oklo is a $25 billion company. Amazon has way more shares outstanding. Oklo doesn't. Oklo's more shorted than Amazon. Like, you get into all these nuanced reasons for why a stock can go higher than a Mag 7, even if Amazon's earnings are a lot better. And I don't think you can cry about it, right? That's the problem. For the bears that use that as their bear case, well, Amazon's barely up and Oklo's up 100%. It's like, well, that's not a top. I mean, complaining about one stock being up and another stock being down, that's just not enough, I think, to say structurally this has been indicative of a market that can collapse. It's hard to make that argument. Palantir right there going green as well, 176 on the day. I think we have some more analysis right here on gold. Let's see if we can get some commentary on why it continues to move as high as it's moving. Let's pull this up right here.
To play out in one way or another, given everything that's going on, especially again now with the trade war coming back. The second reason why gold is going up is because Chinese households in the ETF data are buying significant amounts of gold. And you also see on the sanctions side, central banks globally are still divesting from U.S. treasuries and buying gold instead. So those three tailwinds have continued to provide very strong growth in gold prices, and we should expect that to continue.
So those are going to be price insensitive, kind of buyers in there? In other words, they're going to keep 4,100 an ounce, we're going to keep buying?
I think some of them will be the central banks because of sanctions. They're definitely price insensitive, and I think also a lot of the demand from China has likely also been price insensitive because Chinese households can really only buy two things, namely apartments and housing and stock prices. They don't have the option of buying U.S. equities the same way that we have here in the U.S. and Europe. So because of that, they have been diversifying away from their traditional investments more towards buying gold. The ETF demand in Chinese gold has been very, very strong in China.
It was weird to see the stock market sell off so much Friday and then gold sell off, right? It wasn't a safe haven, and now it's rebounding with the
for
NASDAQ.
A while. Yeah, absolutely.
Yeah, I know.
So, Bitcoin too. All right, Torsten, great to see you. Thank you.
That was not on 1.5x. That guy is a yapper. That guy is a yapper, bro. He talks faster than me. Oh, wow. Howard Marks is going to be on today. Oh, that's going to be interesting to hear what Howard Marks says. You guys know Howard Marks has been saying this is all a bubble. If anyone has not kept up with his thesis. Well, he's not literally been saying it's a bubble. He's just been saying there's no need to buy the S&P. I mean, he thinks that markets are really elevated. And he started saying this back in August. Now, obviously, he's not necessarily been correct since then. But it is going to be interesting to see kind of how he thinks about the sell-off that we had on Friday and some of the recovery that's playing out. Palantir right there at 176. BMNR 54, 54.02 is what we have on BMNR. Howard Marks only said investors need to be cautious. Yeah, but I mean, look, he also If you watch the Bloomberg piece he did back in August, he tried to not say it was a bubble, but you could pretty much tell through the tone of his voice. He is not excited about valuations at the moment. But I think he's on right now. So let's take a look at him and see what he's thinking about this market.
I sat down with Marks exclusively to talk about how his views on the market have developed over the years and whether he ever thought when he first started writing these memos that they would become what they have.
I actually can say that it was not premeditated. I wrote the first one because I had a couple of things happen that I thought the juxtaposition would be interesting for people to read about, and it illustrated an important value of oak trees, and that's why I wrote it. I didn't have a plan. I don't think I even had a plan to write another, certainly not with any regularity, certainly not 160 odd memos over 35 years.
That was October 12th, 1990. You wrote about performance. I went back and looked at this one. And essentially, there's always a little bit of a lesson based on your personal experience, and that was don't swing for the fences.
Right, right. I met with a client in Minneapolis who explained that he'd been managing a pension fund for 14 years, and in those 14 years, the equities had never been above the 27th percentile or below the 47th percentile, so solidly in the second quartile, 14 years in a row. And where did that place them for the 14 years overall? 4th percentile. Well, how does that work? If you fluctuate between 27 and 47, don't you average 37? No, you get up to the top, the very top of the universe, because everybody else eventually shoots themselves in the foot.
Because they took too much risk.
Right, at the wrong time. So consistent good performance and an absence of blow-ups will give you a terrific record over time. You don't have to be a hero.
So when did you start getting a response?
On the first, the tech stocks started to decline, and then, as I wrote in some place, after 10 years, I became an overnight success.
Because it was a great call. You had also some similar warnings 2007, right before the market crash, about excessive risk taking. So that is a theme. You can predict these bubbles based on what? Psychology?
It has a lot to do with psychology and the resultant behavior. So if you can just be sensitive to the psychology that's governing the markets and the behavior that's directing people to engage in, I think you can figure out those rare occasions when you're at an extreme, when the market is either crazy high because of excessive optimism or crazy low because of excessive pessimism. And when you can find those occasions, which arise once every decade or so, maybe you can make hay.
Because you also had one in 2008, around just before the bottom, where you said it's starting to look very interesting.
Oh, yes. Well, again, excess, that's the key. I think it was October the 8th of 08, which was very, very close to the bottom of psychology in that cycle. And I wrote a memo called the limits to negativism. You know, it's our job to be skeptical. What I said in the memo is that I was detecting sentiment that was too bad to be true. I could not come up with an assumption negative enough to satisfy the naysayers. And when that level of excessive pessimism is prevalent, you have to conclude that maybe the prices of assets are just too low because the psychology is depressing them. And so, you know, we concluded that we had a great opportunity. And fortunately, we had raised a lot of money in advance of what we thought would be a good opportunity. And my partner, Bruce Karsh, swung into action and invested at a very fast clip. And of course, in the aftermath of the Lehman meltdown, et cetera, AIG and so forth, all you had to do was buy vigorously. And fortunately, he did.
And that was a win. And that was a winning trade. So a lot of people look at the moment that we are in right now, and they see very high valuations. And I don't know how you would deem sentiment, but there's certainly a lot of enthusiasm around technology like AI. Are we in that moment?
There's enthusiasm. There are high valuations. I don't know enough about tech stocks or stocks in general or AI specifically to know whether the valuations are excessive. My response to date has been that the valuations are not crazy. High, but not crazy. And when things are either high or low, but not crazy, you can't make an observation that has a high likelihood of being correct. And, you know, this may prove to have been a time when you should have become defensive. And people will look back and say, well, why didn't you? But I don't think you can say that dependably right now. Expensive.
So that's a quite interesting statement from Marks. Valuations are high right now, but not crazy. I mean, it's not as bearish as he kind of sounded 2 months ago when he was a little bit more around sounding the alarm. But right now he's saying, well, I guess, I mean, since then we've had some more earnings. So maybe he's seen the earnings and it's hard to deny some of the momentum from those earnings. Also, the Fed is cutting and, you know, Howard Marks understands the macro really well. If you're going to get a Federal Reserve rate, you know, anywhere below 2.5%, valuations might not be that crazy. So actually kind of a bullish statement coming from Marks.
And going down tomorrow are not synonymous. And I wrote a memo celebrating the 25th anniversary of that first memo, bubble.com, that got attention. I wrote a memo called On Bubble Watch, and I said that, to me, the main ingredient in bubbles is psychological excess. There's no such thing as a price too high. And I don't detect that level of mania at this time, so I have not put the bubble label on this incident.
Because some people are wondering if there are echoes back to the dot-com bubble with AI. Well, transformational technology by all the chip stocks that are playing into it.
Right. Well, I think there's relatively little doubt that AI will change the world. And AI has been successful as an investment, and people are piling in, and there's some fear about being left out. But to me, it just hasn't, this is a judgment call. And to me, it just hasn't reached that critical mass of mania.
Value is another thing. You just wrote about value in your recent August.
All right. So, I mean, pretty decent commentary from Marks. Now, remember, the headline in his Bloomberg interview 2 months ago was U.S. stocks, quote, in the early days for a bubble. That was the headline. Anyone can go watch it. Type in Howard Marks Bloomberg on YouTube. About 2 months ago, that was the headline that he said in that interview. It looks like his tone has kind of changed. I mean, he didn't say anything along the idea of we are in the quote unquote early days of a bubble. In fact, he's saying that AI can change the world, and he's not seeing the hype and sort of, what did he call it? Euphoric mania that would constitute the bubble label. So I guess in the past couple months, maybe his thinking has shifted a little bit more towards potentially even recognizing the transformational effects of AI deflating a lot of the hype that he thought existed. And that could be a tailwind. Now, Howard Marks is not invested in any of the AI companies, so he doesn't have exposure to it, but doesn't look like it's the most bearish. S&P right there, 661, getting a bit of a red candle from 663, and that's down. Hoodie, 139.80, that's down 0.5%. Grab still holding on to 590, and then Google up 1.9 on the day. Silver's breaking 52, really? Goodness gracious, bro. Silver spot 52. Wow. This is incredible, bro. You could have bought silver and gold in January and just sat back and chilled. Is anyone buying silver or gold right now? Like, is anyone buying precious metal? I feel like if you have obviously like a 10, 20-year horizon, buy silver and gold, it'll be fine. But is anyone buying it for a trade? Kind of feel like the juice has been squeezed, right? Both up 50%. But then again, I mean, if freaking Tether and central banks and these crypto stablecoins are going to back gold 1-to-1, I mean, maybe it's going way higher. Maybe it's going way higher. I bought last year. I bought a couple months ago. I bought back in 2020. I have gold miners. Yeah, gold miners have done great this year, even copper miners as well. GDX, wow, 120% year to date. Goodness gracious, bro. I mean, people say the market's led by tech, but there's been a lot of diversification in this rally across a bunch of different names. Gold miners, rare earth metals, energy stocks, nuclear. I mean, all this stuff has not been the Broadcoms or Nvidias of the world, but they've done well. Energy fuels today up 18.5%. Goodness gracious, bro. It's been pretty wild. My uncle's in the chat. He said, I've been holding silver from our India trip. He told me to buy it. I didn't buy it. He said, buy silver. I was just like, bro, who cares about silver, bro? He gave me a whole book. It was like, read this book about silver. I was like, I'm buying more Robinhood. I don't give a shit about silver. Which technically wasn't, Robinhood was 26 at the time, so that worked out. But I should have probably got a little bit of silver. I mean, dude, it's really broken out. Silver, copper, and gold. It really has. And usually these things happen in multi-year cycles. So if we're in one of those multi-year cycles, maybe that's somewhat of what you're seeing right now. What's the name of the book? Okay, I should be able to find this pretty easily because there's not that many books on this. My uncle can give us the name of the book in the chat. It was a book that came out in like 23 or 24. But it was one of like the most important books, at least that he said to read in silver. Yeah, silver, gold, etc. also used in semiconductors. Copper is used in data centers. So like the AI thesis is kind of synonymous with a lot of the precious metals that are going up. Yeah, the Great Silver Bull. That's what it's called. The Great Silver Bull. This came out in 2022. This is the name of the book for those that want to learn more about silver. Okay, so crypto's going red. Hood just went red. Bitcoin, ETH going down. Looks like there's going to need to be a little bit more buying pressure to get people excited about those. BMNR, as a result, will probably go down as well. 53.33, down from 56. But you're getting some of the high beta names taking a dip. Also, S&P 663 back to 660. So not really a trend today. A lot of back and forth price action. If you were assigned puts on Friday, you're getting liquidity today. You're probably going to be able to sell for at least, if you sold puts on Meta at 700 or Nvidia at 180, you're getting the ability to sell today. Question is, do you want to sell or do you think there's a lot more room going higher? If you sold puts on SoFi at 25, there's tons of buyers that are stepping in. So the question now is, how do you manage some of the puts that were assigned on Friday? BMNR, there were people, there was someone on Twitter I was talking to, she got assigned 20,000 shares of BMNR at 48 because she had, she sold puts on it. Dude, BMNR is up $5 today. That's $100,000. If you want to sell the entire position, the rebound has been quite quick, at least to some extent, to get some of that liquidity. Did you look at TAC? Chris Camillo likes this one. So this is a Canadian company, if I'm not wrong. TAC, it's up 11% today. Engages in the distribution of electricity through wind, hydro, gas, coal power plants. Okay, so this is an energy name, $5 billion company. Yeah, Alberta, Calgary is its headquarters. I have not looked into this. If Dumb Money did an episode on it, then I do think it's worth looking at it. It looks like they're looking for the energy plays as well. It seems like everyone's looking for what's the next energy play, given the run we've seen in energy. So, yeah, it would be worth looking into. I'll see if I can do some due diligence on this. Translata. How much is this stock up year to date? TAC. 1030 slam. All right, it's 1030. Let's see if we get slammed. It's only up 23%. That's good. Not a big mover. So maybe there is some opportunity, but we're going to have to do some fundamental looks on it. Brocky said about 300 shares of BMNR. Yeah, I think a decent chunk of people bought the dip on that on Friday. I know Steve bought some more on that as well. We got Amcor back to 30, which is nice to see. This one fell to 28.50. I did buy the dip at 28.50. I also bought at $30.80 right before the dip. So amazing timing. But this one trying to get back up to $30. Pound right there, 176.22 on the day. All right, let's finish up with Howard Marks, and then we'll keep going from there.
Made. It's harder to do that on a value basis, especially for startups or companies that are early in their life cycle. But you know, the connotation of hard value investing has been prosaic companies that have existed for a long time, that are not really on a growth curve, but rather are quite stable, but have repeatable cash flows and earnings and so forth. That's kind of the extreme of value investing with a capital V, and that may be too restrictive. So I think something in between. I think based on the historic numbers, something like the S&P 500 is expensive today. There's no question about it. The PE ratio on the S&P 500 is around 24 on the next year's earnings, and the historic average is 16. So you can't say it's not expensive. But what you have to engage in is, and my last memo, the calculus of value, I gave what I thought was part of the bull case, which is the S&P now is better. They're better companies. They have market dominance, fabulous products, moats protecting against competition, enormous incremental profitability, and great growth potential.
So the optimism is warranted.
They're better companies, so they warrant higher multiples, and the optimism is warranted. And
dude, this is pretty bullish by Marks. This is, I mean, first of all, he's saying he doesn't see euphoria. He's saying, yes, the S&P is expensive, but the valuations are warranted because there's better companies. And he's also saying that it's not, he's refusing to put the bubble label on it. I mean, from a traditional value investor, I don't think you can ask for anything better. It seems like he's saying this is a bull market that has the potential to continue.
I'm not knowledgeable enough to say that's wrong, but but this is an example of something called, this time it's different.
Which that must worry you a little to say.
Well, this time it's different is always said about the, quote, new thing.
It's said during bubbles too, right?
It's, well, especially in bubbles.
Yeah.
And it is the sentiment that gives rise to bubbles. This is something we've never seen before. There's no historical parallel. This thing's going to the moon. The valuations are high, but this time it's different.
So can we expect 35 more years?
That's my goal. Will you still come visit me?
Of course. I'll come visit you, and we'll interview you every time, because we always want to hear what you have to say.
Thank you very much.
Thank you so much, Howard. Really appreciate it.
Dude, pretty bullish by Howard Marks. I did not expect him to give those types of quotes, just given kind of where he was leaning towards a couple months ago. But he's not necessarily that bearish on the market. Again, Howard Marks does own, I think, like 14 million shares of Grab. So he is heavy in that one. But he's not in the S&P or Nvidia or anything like that. But it doesn't seem like he's necessarily calling a top here or saying that it's a bubble. So Brittany says he has aura. Yes, he has aura. Dude, Howard Marks, how old do you guys think he is? He is, I actually studied Howard Marks a couple months ago because he bought Grab, and Grab's a big position. So I went deep into like his life, and I read a lot of his memos. Howard Marks is 79 years old, and he seems as sharp as ever. So it's quite incredible. And he's still managing money at a pretty high level as well. And it doesn't seem like he has any plans to slow down. By the way, I watched a 46-minute documentary over the weekend on Raising Cane's. Did you guys know the Raising Cane's founder is worth $26 billion? He owns 92% of the company. It was a documentary on Forbes' YouTube channel. Like, it was a fascinating story of what this guy had to do to start the first Raising Cane's. I've only had it once in my life because there's not a lot of Raising Cane's in New York or New Jersey. It's more of a down south, Midwest type of thing. Started in Louisiana, but they have a simple menu: chicken fingers, fries, coleslaw, and bread. And they do $5 billion in sales. And they have almost 1,000 locations worldwide. I mean, $26 billion off of Raising Cane's. Yeah, Louisiana icon. 92, dude. And they were like, hey, when are you going public? He's like, bro, we are never going public. He's like, I don't want to answer to quarterly earnings and shareholders and try to get our numbers every 90 days. He's like, nope, we're fine doing what we do. And I mean, the guy's worth $26 billion. Why would he even want to go public? Like most people go public for liquidity. I mean, he has plenty of liquidity and, you know, his net worth continues to increase as the company continues to grow. But it's quite an incredible American establishment that's been able to take off. S&P 500 right there, 1.37%. That's green. And then Nvidia still holding 188. I bought SMCI call spreads 60.90 for 2027. I said that last week. SMCI call debit spread for Jan 2027, 60.90. I'm probably not going to wait for it to get to 90. You know, if it makes a nice move up to 75, which is kind of what I think is more fair value based on all the deals we've seen with Nvidia, AMD, etc. All of these are going to need more liquid cooling technology for GPUs. It's just that simple. So it's a very simple trade on the idea that SMCI will probably catch up with a lot of the other semiconductor names. The stock's been relatively flat ever since the whole accounting fraud thing. And so I don't think that's really a risk anymore, but I think you're going to need a lot more of their server rack technology if you're going to have a lot more GPUs being implemented. So 60-90 spreads for SMCI 2027. Broadcom still up 10% on the day. I bought more Amcor on Friday on the dip. What's my average? Let me see. We're above 30. I have 2,500 shares of it now. Again, this one's also a trade, looking for about 50 in 6-8 months. I think it's possible on a re-rating. Company trades at 1.5 times sales, 1.15 times sales, relatively cheap if they continue to make progress on their fab with TSM. Yeah, my average is $30.50. So close to breaking even on this one. EOSE, this one continues to move. 21% on the day. Piper Sandler from Meta. Wow, 880 price target. Dude, Meta is going to be I think it's going to be the most interesting Max 7 earnings because Zucks is spending a lot. And again, they had that $14 billion investment into freaking Scale AI. I mean, they've been deploying cash, I think, at a faster pace than all the other Max 7s. But their earnings growth shouldn't dissipate. I mean, it was 23% growth last quarter. I mean, that's incredible for a company of their size. So as much as investors might be scared that Zucks is spending too much, it might not matter if the earnings continue. Tesla, 3.5%, 427. That's green. Tesla continues to go green, 428, up 3.5% on the day. Where's Delta? Delta had a good earnings last week. United's going to have earnings tomorrow. Delta right there, 58. That is up 1%. By the way, Citibank today, they came out and said they're launching a service for the custody of crypto assets. So you're going to see a lot more crypto potential mixing with TradFi in 2026. And they might talk about that on their earnings. It seems like a lot more companies are going for that in the financial space. And Amazon came out today and they said they're creating 250,000 jobs in the US this holiday season. So it looks like Amazon does not think they're going to lack the demand that's needed to execute on a successful holiday season. They did have their Prime Day. I think we'll get those numbers this week on how the Prime Day went. But that continues to show some excitement. Also, this was some news from Taiwan this morning, which was interesting. Taiwan is considering a law to classify data centers as public infrastructure in order to unlock tax advantages, access to government funds, and incentivize investment. I mean, this is also pretty incredible, dude. Taiwan is considering to classify data centers built by private companies as public infrastructure because they understand that their entire economy has really been backed on TSMC, and TSMC is pivotal towards the chip market to build out all these data centers. And Taiwan's like, you know what? Let's just bet the entire country on data centers at this point, given that is like our main source of revenue. And we're going to lean into it. It is really incredible. But when you have entire countries transitioning to change public law, which the Big Beautiful Bill also did with zoning restrictions on data centers, that shows you how much sheer amount of money is coming into the ecosystem. Fear and greed, by the way, is at 33. We were at 29 on Friday, so we're still in fear. We're not even at neutral yet, but we still are, as per fear and greed, in the moment of a buying opportunity. And then you got this chart right here from Ryan Dietrich. The fourth year of a bull market starts right now. Only once did year 4 see a bull market end, or see a bear market and end to the bull market, which was 1966. The past 4 years saw stocks up double digits and higher 6 out of 7 times. So this is just a general argument that the fourth year of a bull market tends to continue to be strong. And 9 times out of 10, you see higher momentum into that fourth year. You're going to need something really structural to stop it, and it's probably not a Trump China tweet. MP, that one continues to move. Look at that. 25% on the day. My goodness, this stock year to date, 500%. Investments from Apple, investments from Congress or the Department of War. I mean, and rare earth metals, the market needs it. Better's down 9%. Okay, Better. This is the second Eric Jackson pick. He claims this company will be worth $12,000 a share in the next 5 years. That one, I don't know why it's down 10%, but that's down 10%. How about Open Door? Open Door is also down 0.5%. Okay, so Open Door, the meme stock thing is running, but Open Door is not really running. That's actually the highest holding in the meme stock ETF. That one has been flat. After it lost 1080, it's kind of been stuck in the low 7s. But it could be forming a base there, which is not that bad. SoFi right there, that's up 2.5% on the day as well. Yeah, Rigetti is up 16%. I don't know why the quantum names are moving today, but they are rebounding pretty aggressively. Rigetti was at 51 at one point. But those stocks not slowing down either. IONQ up 12%. Thoughts on InnoData? I don't know enough about that company. I've heard about them. I would have to look into them more. I know a lot of people like this stock for a variety of verticals they're in. Wow, 104% this year. See, there's... Wait, no, I think I'm on the wrong one. IOND. What's the ticker symbol? INOD. A lot of people are finding different verticals. This one's, well, it's up 117% this year. Different verticals that have made triple-digit moves. You didn't just need to be in the hood or the Rocket Labs or the NVIDIAs. There's a ton of diversified views right here. Mike Alfred, is he buying? He said he tweeted that he might buy Open. Did he officially buy? I mean, he did say, no, I don't see the tweet that he would buy. He bought Open Door yet, but last night he said, if Open Door drops another 10 to 25%, I may take a position. I mean, we're not down 10 to 25% yet on it, but maybe he does buy. Today's low volume, the real test of tomorrow. Yeah, I agree on that. I mean, we're definitely seeing low volume across the board. You're not seeing... Yeah, I mean, just looking at some of these numbers, volume is not as high as you would expect. The Oracle CEOs are going to be on soon as well, and we'll get to hear from them around what's going on with all this potential circular financing with Nvidia or with OpenAI. But the rest of these stocks holding on to green. By the way, for those that have been asking this question, which I get pretty much every week, which is when is Anduril going public? Here's what Palmer Luckey had to say on Friday about their plan for an IPO.
Look, we are on a path to IPO. Like I can explicitly say that. I'm not going to be coy about that. We are running the company as if we are going to be audited by the auditors that are looking at public company traded companies. We're running the company's financials as if we need to be accountable to public market investors. You need to be a certain shape of company to be in the public markets. You need to have a certain level of credibility in your accounting process across the organization. So like the old school Anduril stuff of, hey, toss it in the bin. No need to do any paperwork. No, you actually have to properly account for what's on the shelf, what you've thrown away, what's working, and we've gotten into that swing of things. It's going to be in low single-digit years. And by the way,
do you have to be profitable for that? Like at the moment, it is very expensive what you are trying to build.
Agreed. So my philosophy on this is that if you are going to be in the public markets, you need to be the shape that the markets want you to be. I think that's not a very unprofitable company that has a trend that looks very unprofitable. So my personal opinion, and I'm not hiding the date from you, we genuinely don't know. We're not going to do it till the right moment. We don't have to. Private capital is amply available to us. But what we want to do is either be profitable across the business, or we want to be on very close to it with a clear trend showing it's certainly going to happen. And I don't mean it's going to happen someday years in the future. I mean like, hey, we have these contracts, and if you just believe that we are going to deliver the things that we've already sold, then you know that we're likely going to be profitable.
So the question is, who's buying the Anduril IPO? Who's buying the Anduril IPO? Are you buying the Anduril IPO? By the way, Palmer Luckey is not the CEO. He's the, I think, executive chairman of Anduril. They have a different CEO. He is the founder of Anduril, but he is not the CEO. Robinhood right there going red, losing its green. S&P still holding up. I think that's probably because Bitcoin and Ethereum are going red as well. But it looks like 2 years. It looks like 2027. It doesn't look like a 2026 year. He did say years with a plural, so I guess earliest is 2027. Yeah, seems a decent amount of you. Seems a decent amount of you want to buy this thing. 68%. 68% of you guys want to buy it. See, the problem is I don't think there's going to be, like, I don't know how much allocation retail is going to get, but even if you know, Schwab, Fidelity, Robinhood don't give you shares because it's just too oversubscribed, I think that the open of day is going to be just tons of money coming into Anduril. People are not even going to care if they didn't get allocated in shares. They're just going to buy them as soon as it opens and goes public. I think it'll probably be one of the most liquidly traded stocks in the market. Like, it's probably going to be a top 50 traded stock. There's just so much excitement around the company and defense tech. Now, granted, it's a hardware company, so I don't think the margins are going to be the best, and they're hiring people like crazy, growing like crazy. So I don't know if it has that massive $1 trillion potential that people think an Anduril can get, because it's not a software company at the end of the day. Now, they make software, but are they like commercially selling mass amounts of software, which is what really creates the margins for a company to get to that multi-$100 billion, $1 trillion level? I mean, not that I've seen. They're selling tanks and drones and equipment, right? This stuff is totally different, and it does not have the type of margin that like a Palantir would have. But I still think there's going to be a lot of excitement, and people will probably want to buy in. UEC, Uranium Energy, that one also up 5%. 5% on the day. Palantir already has a partnership with Anduril. I mean, they do a bunch of different things with Anduril, but they don't have an equity stake in them, which sucks. Like, it would have been so nice for them to have an equity stake, but they don't have an equity stake yet. Elon Musk's Boring Company will open its first Dubai loop by Q2 2026. Huh. Has anyone taken the Boring Tunnel loop in Las Vegas? Because I'm not going to lie, when I did it, it was pretty underwhelming. I mean, it wasn't really that exciting. It was kind of boring, to be honest, as the name suggests. But it looks like expanding to Dubai is a good thing. Yeah, you guys agree, right? Like, people that have been there, it's like not that. I thought it was going to be a different experience, but there wasn't there. By the way, Trump's on his way to Egypt right now. He visited Israel this morning after the deal was signed last week, and it looks like he's going to be speaking in Egypt this morning, potentially soon, at an Egypt Peace Summit, I think is what it's called. Yeah, Egypt Peace Summit. Don't know exactly when, but Trump will be speaking there. Any good news on geopolitical stability could also, be what the markets ultimately want to hear to kind of calm down a little bit. Palantir, that's slightly red. Tesla, 424. AMD, still green on the day. Again, that Broadcom deal was the biggest news of the morning. Speaking of the UAE, Emirates Airlines says they will accept Ethereum as payments in Q1 of 2026. So, I mean, there you go. You got more and more larger institutions saying that they are on board with Ethereum and the ability to collect Ethereum from a payment perspective. So you're getting more people excited about ETH, which is why I think Tom Lee keeps buying it. AppLovin right there, 570. Circle, AppLovin below, or not below, but close to levels it bottomed at last week at 558. Or no, it was at 545 at bottom. Enphase right there, 4% on the day. Bro, what are you guys saying? I said Emiratis wrong? Oh my goodness. Did I say it wrong? Emiratis? It's freaking Emirati. Wait, how do you say this shit? Hold on. How do you say this shit? Have I been saying it wrong my whole life? Hold on.
United Arab Emirates.
Oh shit. Oh fuck. Oh my goodness. No, well, that's that's I can't even defend myself on that one. I can't. No, I can't defend myself there. That's Emirates, bro. Dead ass Emirates. Why did I think it was Emiratis? That is, I can't even defend myself there, bro.
United Arab Emirates.
Emirates. All right. Well, it's, you learn something new every day. You learn something new every day. This is life, bro. It's life. We need to see how Trump pronounces it today when he speaks to everybody. Dude, I thought it was Emiratis. I guess it's Emirates. It is what it is. It's life. You learn something new every day. Rutgers education, dude. Is anyone in the Northeast? Have you experienced this nor'easter? Because I've been waiting for this rain, and I'm not seeing any rain. Literally over the weekend, all I was hearing were reports that it's going to be the worst rain we've had in like 10 years. I mean, we had a little bit of a drizzle, but I don't see any crazy rain. Maybe it's happening. Every time I check the weather app, it's like next hour, 100% chance of rain. And then you get to the next hour and there's no rain. I think down south, New Jersey, in the tri-state area, you've seen a little bit more pain. Robinhood right here, down 1.2%. Palantir as well going red. But it's not been north. You haven't seen too much. Dude, they were talking about the power is going to get wiped out across the board, all this shit. Like, I'm like, I don't see any. There's no rain, bro. They were saying schools were going to shut down. It's like, I don't see any of that. In Boston, it's bad. It shifted. It might have shifted, dude. I feel like it went right over the north part of New Jersey. Palantir right there, 174. Now, Hood, look, I mean, one thing that people are talking about that could be a bear case on Hood was the lack of buying and selling on Ethereum and Bitcoin over the weekend on Friday. Or it wasn't literally over the weekend, but it was on Friday. I talked about this last night on the Market Futures show. This is not a good look for Hood. 1000%, it's not a good look for Hood. And I can understand people taking their assets off the platform because they're annoyed at what Hood did on Friday. However, it wasn't isolated to Hood. When there's a $20 billion liquidation event happening in crypto, there were a lot of exchanges, including Coinbase, Binance, Webull, IBKR, et cetera, that had issues. Hood is just, the one that gets publicized the most. So is it a good look? No. Should Hood be better prepared for these types of volatile events? Yes, because that creates trust in people with the platform. Is this a reason Hood's stock needs to get destroyed? I don't think so. And if it does, I'm a buyer if Hood ends up going, down 10, 15% because of that. So I don't think that's the reason Hood's down today. I think the reason Hood is down is because A, crypto's down, and B, again, it made a big move from 120 up to 150. It is going to take some time to consolidate. And I think that's pretty healthy. So I don't think it's an excuse for Hood on Friday, and they really do have to make sure during these volatile events they can be better. But it's not like they were the only brokers that was stopping you from buying or selling. When there's a $20 billion crypto liquidation, that's 10 times higher than COVID. I mean, you're going to have a lot of systems mess up. And unfortunately, the entire crypto ecosystem is not fully prepared to handle that type of volume, but that's what happened on Friday. And I think that's why Hood took a little bit of a hit. S&P 500 right there, 660.35, losing 663. And that one is down. Shouldn't Hood be doing better than the others? The point is we want them to be the best. Yes, I agree. And I'm making no excuse for that. I mean, we want them to be better. It's just when you have that level of volatility, if every brokerage can't sustain the types of velocity of action that's happening, it's a problem with the broader crypto ecosystem. And Hood hopefully is able to be one of the brokerages that is the most trustworthy. But on Friday, they did have some issues. Now, granted, the issues lasted for about 30 minutes, and a lot of people ended up getting their orders filled after that. But there was that 30-minute time frame where it got stuck. And again, Hood is routing orders to different exchanges as well. So like if the other exchanges weren't taking their orders, like that's when you get into a place where it's like, what more can they do? But obviously we want them to have more and more capacity to handle this stuff when it becomes volatile. AMD right there, 217, that's losing 220. So you're seeing a lot of these stocks lose their high of day. Pinterest is up 2%, Circle's up a little bit, App 11, that's flat. TLT, where's the 10-year? Well, it shouldn't be moving today because bond markets are closed. But that's still closed under 4.1 on Friday, which was really good to see it potentially come below 4%. But that one's not moving higher, which is good. You don't want to see the bond market selling off bonds if the market's taking a hit. The bear who shorted 700 million of Bitcoin and 350 million of ETH, making 200 million total, is now short 340 million of Bitcoin. Wow. Okay, so there was an account that signed up on Hyperliquid, which is this platform that allows you to go long and short on perpetual futures. And they made $200 million on shorting Bitcoin and Ethereum, about $1.3 billion of both. And they are now short another 340 million of Bitcoin. Okay, so you've got that account basically saying, yeah, wow, look at this. The liquidation price is 130,000. So if Bitcoin moves to 130, he gets liquidated. $345 million Bitcoin short position. This is the same blockchain address that made $192 million off shorting Bitcoin and Ethereum 30 minutes before the Trump tweet came out, which is why a lot of people think this is obviously some type of inside job, or someone definitely had information about this. Which, I mean, come on, bro. It's hard to again, I don't think you have to be a conspiracy theorist to be like, really? $1 billion crypto short 30 minutes before a Trump tweet? Like, I mean, who wakes up and says, I'm just going to go short $1 billion worth of crypto at that exact time? Like, it feels suspicious, but it looks like they are continuing to. They entered into the short at 116, 340 million. Bitcoin right now is at 114. So that short is up. It's bear and Trump. Maybe, bro. Maybe it's freaking Barron Trump. Dude, there were rumors over the weekend that Barron Trump potentially is going to get a high-level role in TikTok. Bloomberg is reporting that Barron Trump potentially might be playing a role in managing like the US version of TikTok, which is this new subsidiary that the government owns a part of. I mean, maybe that ends up happening. Oh, Trump speaking. Let's transition over to him. He is at the Peace Summit in Egypt now.
This deal, this once-in-a-lifetime deal, nobody's ever seen anything like what's happening today. And countries have all come together, all different countries. Some liked each other, some didn't, most didn't. And they've all come together. Every country has come together. And by the way, Iran did put out a statement, that they support this deal very wholeheartedly. So that was in itself something. But no, I think they want to, that's all I do in my life. I make deals. And they want to make a deal.
Now that the living hostages have been returned, can you please tell us what the next steps are?
Well, they're going and looking for bodies. It's a pretty gruesome task. And they know where numerous are, as you know. I guess 5 or 6 are in yet now. But they're looking for bodies. They know the areas, and they search parties out, and they're doing it in conjunction with Israel. And they're going to be finding quite a few of them.
President Trump, can you tell us when phase 2 of the negotiations will begin?
Well, it started. I mean, it started as far as we're concerned. Phase 2 has started. And, the phases are all a little bit mixed in with each other. They're going to start cleaning up. If you look at Gaza, it needs a lot of cleanup. That's why when I talk to you in my speech, I talk about the debris. I use the word debris. That's debris times 10. So, but they're gonna really do a job. They have a lot of power. In another room, you have the wealthiest, some of the wealthiest nations in the world. All leaders, the big leaders are here. The emirs and the kings and everybody, and it's a very interesting group. I guess we have like 35 countries, and that's only because they were the 35 that we invited. Everybody that we invited came. So there's a lot of...
Our customers are so excited about AI. In fact, that's pretty much all you'll hear them talk about here this week, that we decided to rename the conference AI World.
And so what are you hoping those customers and those in attendance here get out of this? What is the object?
Well, I think there's the main thing is here.
Feeling left out.
Okay, don't. But this is just a little more sort of customer-centric.
I'll tamp down my insecurity.
Okay, good. I mean, we all wonder, and I think appropriately so, what's going to be the return for these trillions of dollars that are being spent. So what I'm hearing you say is the enterprise, those of us who say, well, we're not really seeing it yet in the enterprise. That is not the case?
That is not the case that we're seeing. In fact, we're seeing exactly the opposite. And we're seeing not just quantitative return, in hours saved, faster time to hire, faster time to process transactions, better insights, but actually qualitative as well. I'm going to have a customer tomorrow on stage with me that's going to talk about the impact on human lives when it pertains to using AI to fight antibiotic resistance. Actually, he's going to share how many lives they've actually saved by using Oracle Applied AI with this technology.
And how recent is this technology?
This is in the last 2 years. This is in the last 2 years that they've been leveraging the Oracle technology. We're going to see, I think, ecosystems open up. So we're going to see healthcare organizations have a better relationship with their banks as a result of being able to look at all of the qualitative metrics that are associated with their receivables. This is a very different view than just looking at, looking at the past and looking at a spreadsheet and looking at static reports. I mean, this is live, real time, qualitative insights at your fingertips. Hugely exciting.
So the value proposition is there for your customer base,
Absolutely.
and they're seeing it and they believe it, and they're just going to keep spending more.
They will. Well, they'll be speaking about it here this week. And what's important to understand about our AI strategy too, with our applications, is that we're not charging extra. Our applications essentially are AI. The foundation of our applications is AI. So they'll be spending more in that. We think we can sell more applications as a result.
All right, we'll get to you now.
Well,
we're going to go back and forth.
I'm going to chime in on Mike's comments,
Please
but I think something that, not only is Oracle delivering applications, we're also a consumer ourselves, right? So we've seen an amazing amount of adoption. If you think, we generate more than 20 to 30 million lines of code every week that we use for developing these products, all by AI. Right, the success that we've had with our support products and deflection rates across our entire portfolio, we see it across the board from ourselves and all of our customers.
So is that, what are we talking about, an AI application generator, or can you explain what that actually is?
Sure. Well, I think it's across many different pieces of technology. One of them is, and you'll hear Larry talk about that more this week with our new Apex AI application generator. One of the ways that you can write applications is if you go back a few years ago, it started off with you kind of get a blank sheet of paper, you do some middleware, you write code from scratch. That's not how people are writing these applications these days. One of the ways they're doing it is they're using AI agents to actually integrate into their workflows. And we're doing a lot of that ourselves. But you can actually take that to an even higher level where if you really embed the application context into the database, you can go in and actually generate the application without having to code from scratch at all.
So Oracle continuing to basically make the argument that, look, AI is real. We're seeing use cases inside of not only our cloud data centers, which is the deal they have with OpenAI, but also the applications of what they're offering to the market. Power Integrations, by the way, folks, is up 10% right here. Nvidia just announced they're going to be collaborating with Power Integrations, ticker symbol POWI, to accelerate the transition to 800 VDC power and megawatt scale racks. Power Integrations with Nvidia, that's the headline. $2 billion company. The fact that Nvidia is partnering with these small companies just shows you how much demand is out there that they have to go find really, really small companies that do specialized things to be able to collaborate with. Power Integrations designs and develops mixed signal integrated circuits and other electronic components. There you go. That one's taken off right here, up now 12.5% on the day, based on this Nvidia headline. more and more and more of excitement on this data center trade. Not slowing down. By the way, Eaton, this one has a partnership with Palantir. ETN, they also did a partnership with Nvidia. Eaton announces delivery of new reference architecture designed to accelerate adoption of 800 VDC power and AI data centers, along with Nvidia. So you have multiple partnerships coming out today, along with the Arista, like I guess bear news that you got some companies switching off their networking services. Arista right here recovering a little bit of that 5% drop now, only down 2.5%. Pretty incredible day. I mean, relatively flat across the board. You got Howard Marks, who's not that bearish. You got PayPal that, once again, cannot hold 70 after getting a downgrade by JP Morgan. SMCI is up. Bitcoin and Ethereum trying to hold on, but they're likely going red, or they are red. Potentially could go down more. And then Hood and Palantir not holding up either. But Nvidia keeping the 2% move. Ondas, some of the drone companies, are those moving? Ondas is up 15%. Okay, that one has been ripping dramatically. But it continues to go green. And then again, that meme stock ETF also up 12% on the day. Broadcom right here, that is the main one based on the large caps. That's up 10%. So the big thing to look out for this week are earnings, and that'll start tomorrow. And that is what we're going to have to really see if we can justify a lot of the momentum we've had over the past couple months. And then eventually, hopefully we get back above all-time highs on the S&P. By the way, gold has added 10 trillion of market cap in 12 months. Goodness gracious, bro. 4,100 all-time highs on gold, 10 trillion of market cap. What's the overall gold market cap? It's got to be like 30 trillion, right? 27.8 trillion. All of crypto is barely 4 trillion. Bitcoin, I think, is like 2.2 trillion. So gold is vastly outpacing it, and obviously it's vastly outperforming it this year as it continued to go green. No news on Grab outside of a price target upgrade they got today from JP Morgan, 630 to 680. They're expecting a strong Q3. I'm expecting a strong Q3 as well. So ultimately, a lot of these companies, we're going to have to see what they put up on their earnings, and the market will decide from there. Where's VG? Yeah, that's a good question. VG, again, they got that lawsuit by BP. They're basically flat on the day, but this stock got pummeled 25%. I think the reason Hood is down is because of crypto and Bitcoin. But in general, again, dude, I don't care. If Hood goes back to 130, I don't care. And I say this as someone who has a lot of Hood. I don't think it was that healthy for Hood to go from 120 to 150. I enjoyed it. I think all of us enjoyed it. But to say it's the healthiest thing in the world, probably not. So I don't think there's anything structurally wrong with the business, but I do think the market got really excited and bought up a ton of it. And so if it consolidates and gives back some of the gains, that is okay with me. That gives it a lot healthier of a room to move back up after a good earnings. So, I mean, I think Bitcoin, Ethereum being down is the reason why Hood's taken a hit, but I do think that's not the worst thing in the world for this to consolidate. BMNR as well, not really being able to make a massive move because Ethereum's also going down. But at least it's above 4,000, which is good. I would buy Hood again if we see 125. 125 is where I would get excited to buy it again. Now, I don't think we easily get that. I think that would be wiping out a lot of the momentum. But, you know, if it gets there, I'll be excited again. I just don't think if we get there. Oscar making a little bit of a move. Oscar, it's got to 25 last week, back up to 1934, which is not too bad. Chris, thanks for the super chat. Thoughts on the guy who shorted Bitcoin for 200 million? He added 80 million the last 2 hours to his position. Yeah, I mean, obviously he's bearish and he's waiting for some type of catalyst to continue wrecking crypto. And he's been right so far. Now, I don't know if there's another Trump China tweet coming out. I don't think so. But this guy also could just be being greedy, right? Maybe he's just like, hey, everyone thinks it's a rally, it's a bull trap, and I want to continue to take advantage of the weakness. And maybe that's what's happening as well. James, thanks for the super chat. You only won debates because they couldn't understand you. I guess that was the reason. Jerome, thanks for the super chat. You were right. For Emirates, if you describe the people, it's Emiratis. The country is pronounced differently. It cost me $5 to teach you. Jerome, thank you. I appreciate it. Maybe that's the reason I was a national debate champion. Maybe people just couldn't understand me. And that's why it played out. Qualcomm got an antitrust probe by China last week. Qualcomm right there up 5%. So maybe the lack of the China pressure with Trump and the pivot is leading investors to think, hey, Qualcomm's likely not going to be investigated as aggressively as, I mean, China did this whole thing on Nvidia a couple weeks ago as well, and it was a nothing burger. So I think that could be why Qualcomm is recovering. Maybe that's what we're seeing right here. What about Webull? Yeah, Webull took a nasty hit on Friday. Wow, continues to go down, 1137. 1137. 1190 is when I was going to buy it. I would have sold at like 1250. I don't know. Do they really send Webull below $11, dude? Do they really send it below? I mean, you would think this one recovers, but then again, if Hood is down, all the brokerages are getting hit. Webull is getting hit. Below 11 would be kind of wild, though. Be kind of wild. All right, I think that's it for us. I'll be back on the market close. We'll see what we got going on. Overall, Hood and Palantir red, Bitcoin, crypto red, S&P recovering at least 1.4, which is nice to see. If we close anywhere above 660, I'd be pretty happy with that. But we're going to have to wait until the end of the day to see how this ends up playing out. SoundHound as well. That one is up 12% on the day. All right, word of the day. What do we got? Velodrome.
Velodrome.
Okay. Dude, there's one E. There's not two E's there. And who has anyone heard of this word? A sports arena equipped with a track for cycling.
Velodrome.
I've never heard of this word before, bro. Yeah, I didn't stand a chance with that. It's not as bad as Emiratis, though. It's not as bad as Emiratis. A sports arena equipped with a track for cycling. Velodrome. It sounds like a crypto coin, right? It sounds like a freaking crypto coin. Yeah, that's what it sounds like. All right, that's it. Thank you, everybody. Appreciate it. We will see how this week turns out. We got a lot of earnings coming up over the next couple days. We'll do a little bit of a preview of the bank earnings on the market close, and we'll see what we've got going on. Trump is not talking anymore in Egypt, so we'll probably get some updates from that later in the week. Mike Johnson is talking about the shutdown. Hopefully we get some clarity on that. Broadcom OpenAI deal, massive deal this morning, continuing to fuel the AI ecosystem. Gold and silver continuing to go higher. And I guess over the coming days now, we can see if we end up getting a recovery from this Trump pivot going into the end of the week. All right, there we go. Thank you, everybody. Appreciate it. We'll be back later on the market close. Thank you, everybody. Have a good one.